Morning, Anna. Good morning, everybody. Thank you for the opportunity. Let me just grab this. Let's test the audio and the video, please. Audio, video.
Audio, video, good.
Okay.
I will get back to you in 45 minutes. Thank you.
Before you go, Anna, there's a handout for everybody. I posted it on the chat. I don't know if you can post it for everybody. So,
Sure.
okay. So that will be my handout. All the information I'll be mentioning, all the details are in that handout. For now, I thank you for your attention, everybody. My name is Simon Jousef, and the tradersinstitute.com. The tradersinstitute.com is the name of the business and the website. When I say unique day trading method, achieve 1,000 ticks or pips a month, it's really not an exaggeration. And we can back that up easily. By inviting everybody to free trials. You are invited to free trials anytime you want. And we are available. Just to let you know that if you want to get in the trial, let me just do something here. I need to grab a couple of more pages. Let me see here. If you want the free trial, very simply go to the website, okay, thetraderinstitute.com. And of course, you have the tabs. Pay attention to them. If you want, you can look at the my CFTC case, which is finished earlier this year. But it's laid out in a short video. I spoke with my members. It was settled. Education is the main part, but let's talk about that shortly. First, you need to get started with a trial. And once you click on here, you will get to a Telegram. It will prompt you to download Telegram. Telegram is a messenger that you can put it on your phone, smartphone. You can put it on your computer as well. And basically, you will get to something like this. One second. You will see us. Hold on. Here. You will see us on here. This is Telegram. So you have a channel here. It says indexes. And you have a channel here that is elite members. So all the elite members chat with me, chat with each other, etc. And you will have welcome to DTI. So you will be coming into this channel. It's free, it's open. You can invite your friends, your family, your trader, your fellow traders, etc. Okay. From here, you can ask us, ask us for a trial. You'll become a member on all the other channels, which are, as I said, indices, elite, Forex. Today I had 2 calls on the Forex and both of them winners so far, nicely running, and I will explain later. Oil and nat gas. We have gold and metals, and we have a Bitcoin. Bitcoin I don't do much of because it's very volatile. But to start with, you can start for a trial. Please check out the YouTube channel. It's important. All these videos that you see here in our YouTube channel are taken from our live trading sessions. Okay, so you will see some education, you will see some trades, you will see 2,000 tick trades in one day, you will see 1,000 tick, 500 ticks. It's because we do a lot of swings, a lot of big trades. Okay, it's all here, and you will see some also educational videos. Okay, so that's that. If you go to the website, please, you will notice this resources link. I highly advise everybody to go to the education tab. The education on this page, really, it's very valuable. People probably paid a lot of money for it. You can get it for free. One main video that you need to watch, and I say that jokingly usually, but I don't joke about it really. I really mean it. There's this video here called Adult ADD and How It Manifests itself in Traders. This was done for us by Dr. Kenneth Reed probably 2013 or 2014. Okay. So it's been 6 years, but it's very valid. Anybody who watches it today, it's still as powerful as when it first came out, maybe more powerful now. Okay. Uh, it has nothing to do with me or with my program. It has to do with you and your psyche and how you're approaching not only your trading station and your trading account, but your day-to-day life. It helped me personally in seeing some mistakes I do and I did throughout my daily life, not necessarily in my trading, but this is important. Please watch it. There's another video from the same doctor a couple of years after done for us. Was this is 2016, but this is also a good one, but this one is more important. Volume profile is really a very important subject. It's very detailed, but once you learn it, you cannot go without your volume profile. And throughout the 40 minutes, the upcoming 40 minutes, I will do my best to explain and be detailed. There's this video here, secrets of swing trade calls. I do swing trades, and this video will show you. This is under education, folks. Okay, tab. We have this video is important too. Attraction levels, because the new indicator that I created in the past maybe 3-4 years, 3 years I would say, maybe 4. It's becoming our main tool besides the volume profile. Okay, we have different indicators, but the volume profile and the SAL indicator are our most powerful ones. Okay, and because they pick, they read the market the way that the professionals do. They expose the big boys' intention ahead of time. And we have the DRL, dynamic reversal level, is important. And there's our method. This will explain the method to you. Okay. So please do your best to go through this. It is urgent if you're interested in volume profile to start with these. Please, it is very important. So the method video the method, our method is, it gives you a lot of free tips and education about it, okay? That will come to that after. So if you followed me, if not, here's how I started. Back in 2000, 2001, I started with Forex. I liked it, but then I switched to futures after. Futures, but still doing currency pairs, okay? Not necessarily futures like, the Dow, but then I went to the Dow, to the NASDAQ, and etc. But in 2005, folks, I spent 6 months trying to explore the bid and ask ladder. We don't use this anymore because we have the SAL indicator that exposes all these numbers for us. So I don't use this, but in 2006, I was able to determine a lot of things about the ladder. And this became our main focus. The numbers inside the trading, the numbers inside the traded instrument. What do they mean? How do I benefit from them? I didn't like to continue with typical um, uh, um, the indicators, the lagging indicators. I didn't like them because at best I was at 50-50. So I thought, let me do something about exploring more ways that are not available to the average trader. So I discovered a lot of things: end of buying, end of selling, unfinished business, capping, traps, point of control. Of course, a lot of traders after that, a lot of educators follow suit. But I was one of the pioneers in this department. Okay, I started. These are some pictures from back in 2006, 2004. I used to teach in classroom style. This is in Denver. The previous ones were local in Toronto area. This is in Denver, Colorado. This is in Vegas. You see. I had one of our most recent members or trial members given me this message, and I asked for his permission. He says, uh, I know that you are the real deal. You are the best I've seen at reading the market. And I have been in many rooms, and no one comes close to your accuracy. So focus on reading the market. What are the most important things in trading when you sit down and focus on your charts? For example, euro, this one here, euro New Zealand, or euro yen. Again, it's the same applies to futures, because I do, if you see on the top, I have SPX. This is a CFD, which is the equivalent to the E-mini S&P. Okay, here, E-mini S&P, but this is on the CFD market, which is basically the spot forex or FX for the E-mini S&P. But I also have the E-mini S&P right here. See, ES, Nasdaq. I have the NAS 100, which is the CFD. It's not allowed in the States, right? But all over the world, people trade these. And I have also the Nasdaq itself as a futures futures instrument right here. So I do both. I have oil, U.S. oil, and I have the crude oil. Okay. Now, going back to what are the most important things for any trader to focus on. We focus on, first thing, anticipating the market. Anticipate the market. Now, let's talk about a trade call that I actually made today or yesterday, which is still running now. It's running for about 50 pips now going. Okay, or this is the USD, best example. This is the US yen, USD yen, right here, USD yen. Okay, if you go to the Forex channel, Forex channel, yesterday I called a US yen long, but look at this, Japanese yen short, because Japanese yen instrument is in the futures market. The futures market Japanese yen is opposite to the US yen Forex. Of course, you should understand that. And if you don't know, please ask. The Japanese yen is the main instrument in the futures market. In the Forex market, US yen, US is the main instrument. So they go opposite, but exactly the same tick for tick. So I called it long on the US yen, and I called it short on the Japanese yen. So what is the first thing I anticipated to happen? I anticipated the Japanese yen to go up. Okay, I anticipated the Japanese yen to go up. So I marked my level right here. Anticipate the market. Now, what do you see besides that? You see something different than just anticipation. You see a magenta level right here. And this is where you confirm. This is your one most important level. You see, he says, you're the best I've seen in reading the market. I'm trying to focus on that, reading the market. So now I'm not only reading the market, I'm expecting it to go up. Why? Because I am basing my decision on the volume profile. I'm seeing a support right here in this area, and I marked it. The market comes to it, then I called it long on the USD yen, right? But what was my main trigger? My main trigger was not just because I expected to go long. I confirmed it. I confirmed the long by seeing the magenta line. This magenta line is nothing but, if you go to studies, attraction levels. These are the attraction levels. These are, I can go up to 50, but I don't do 50 for spot. I do one, just for me to see one level, because I swing trade. I don't want to get very busy with the Forex. I want to do swing trading there. I do a little bit more on the futures side. So if you're a futures trader, it's good for you because we do a lot more on futures side. But I confirmed it because now all of a sudden the magenta line showed up. What is the magenta line? This is a combination of many things, but the main important thing is the heavy volume that is uh, hidden in the market and shows up right there, which means there is a big intention for the market to move from here. So I anticipate the next thing is, folks, to confirm. So I confirmed it with the magenta line. Now, what is the next? What is the third thing? Once we get to here, let me just go back. Once we get to here, this is your entry, right? I need to execute. Now, logically, most people will just go long. We'll put a random stop. Random. Listen to this. Random. There's no chance for randomness if you're a trader. You cannot do random anything. Random entries, random stops, you can't. So I would go to my volume profile level and I would see what would my stop be if I call it long from here. If my stop loss is logically is all the way here at the bottom, 104,800, do you think I will take it? Maybe not. I will call it. I would say there's an entry here, but the stop loss is all the way here. Some people can afford it. Some people cannot. Some people will take this on a very small amount. They will do micro. So, but some people will do options. I don't know. It's up to them. But to me, I would say it's a big stop. But luckily, I found a stop right below this area, right here. Okay, and then I called it. So anticipate, confirm, execute. What does it read? Ace. So we ace every trade. I try and ace every trade. So getting into multiple markets that some of them move very fast. For example, the Nasdaq, the silver, the gold, the crude, the gold, the Russell. It's not really hard to get 1,000 ticks a month. Last month we ended up with 44,500. This month I was about 2,000. Yesterday I had a small little bit of a loss. It was a very hesitant day. Probably we're back to under 2,000 now, but still very profitable for the month. Again, I'm not saying this. I'm not pulling words out of my pocket, folks. You come and try us out. I explained what is the trial, how it works, and I will answer the questions after. Now, for you to understand how it works a little bit better, let's say that you are looking for the market to bounce off of a level. So the market is going up. For example, this is, let's say, the E-mini S&P. Okay, that's a very long tongue. Okay, you're looking for the market to bounce on the E-mini S&P, ES. So you're looking for the market to come down to a level. And you, as, for example, you, not necessarily you in person, but generally speaking, you have a level here that you like to trade, which is maybe a Fibonacci level. And you have another level here. Okay? And you think, you know what, the market, I'm gonna take the trade when it comes to this, and I'm gonna do random 20, 30 ticks random stop. Now, the market goes up a little bit, comes down, goes up, you think, oh, you missed it. But you wait, maybe you're patient. It comes down here, you take it long, but it stops you out. It comes back to the next one, it stops you out. It goes lower, 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 lower. It goes back up, and you miss the trade. You would say, man, I should have taken it. Or maybe it comes back down, stops you out here. Now the third level, you are hesitant. You have a third level here. Okay, you're hesitant. Maybe it's a different indicator, but it bounced from it. and you say, man, I should have taken it from here. You never know. Here is what you need to see. You need to know this. The market is not random. You have volume profile. If I show you the volume profile and how it works, watch what? Yeah, whatever we have. Watch the Dow. See the Dow. This is a 30-minute chart. Watch the volume profile on the right-hand side. You see the curves, you see the colors, you see everything, right? This is the details. This is what you should know. This is what you should see. And furthermore, look at this. If I take away the chart, if I remove some of the chart, look how the volume profile thins out. You see how it thins out? You see that? So that you have more details. You see that? And the way we designed it, the way I designed it, you can minimize, you can sharpen the edges, you can smoothen the edges, you can minimize it, and you can maximize it as well. You see that? So with that, let me give you a tour on how I see the market and how you should see the market using volume profile vividly. Volume profile consists of levels, continuation zones, okay, and rejection zones. This is a continuation zone, for example, continuation, continuation, and in between there's a rejection zone. So do you see how the market profile, the market bounced off of the top of the rejection or the continuation because there was a rejection zone here? It bounced down. And the reason it bounced from here, maybe there was a small rejection in the middle. But let's say the market came down here and this is your main level to take it long. But now you're educated on volume profile. This is a continuation zone. Will you take this trade? No. No, you will not take this trade because it's continuation, right? It's continuation. You would say no, no. And if you take this trade, where's your stop? It's within a continuation zone. Where's your stop? You don't know. So you let it go. So you cancel this one. You don't care about it anymore. So all of a sudden, you would, that indicator that you use, it will become a side indicator. You're not going to depend on it anymore. And then it comes back to this level here. Is it close? Yes. But this is my rejection right here. Okay? This is my rejection right here because of the rejection zone. So why would I take it from here? And all of a sudden, you would say, no, I'm not going to take it here. Now, the market comes back down here, and you see the confirmation because now you have sell indicator showing up, traders coming in, and you see them with the magenta color. You can color it any way you want. Now, you take this trade, and the next question is my stop loss is going to be at red or green or blue? Where's my stop loss? Automatically, you would think if it gets into the continuation zone again, it's going to continue down. So why would I have to have it at red or blue? If I get stopped out, I would rather get stopped out a little bit. But again, about 85% of the times, 90% of the times, the market gets rejected from these levels. And you get your first target. Okay? One of the things that we do, if your stop loss is at the green, you have a very small stop. You see this? This is a very small stop. Very small stop. Okay? Now, when I call a trade, I call a trade on 3 contracts. First target is 2/3. So 2 contracts come out at the first target. So if I see the market going up, I would look at my continuation zone going up because I'm expecting the market to go up all the way, right? Because it's an uptrend, for example. And I see my first hiccup against me within this because I'm dissecting this to a smaller chart. And I see, let's say, a 30-tick first target. 30-tick first target. So we get our first target. The stop loss is, for example, 20 ticks. So we got 30 ticks on 2 contracts. 30 ticks on 2 contracts, all right? 2 contracts times 30. That's 60 ticks, folks. We got 60 ticks in our pocket. Our stop loss in the last runner is 20 ticks. This is where it becomes more interesting, because now I would put a note for my members. I will tell them, folks, many times I would say, no moving stops yet. Okay? I would say no moving. I will put it here, right in front of everybody. I'll put it. I will say no moving stops yet. We will move the stops when we go above the first hiccup or the second hiccup. And this is where we are free. Like the market is more, it's better to move. And I'll tell them to move the stop loss to break even and then slowly move it up and up and up. Okay? And best example on my Forex call here. First of all, when you see these calls, folks, these calls are time-stamped. Time-stamped. You see the time per each call right here. Time, time, time. So you know exactly what time was the entry up to the second. But best example, here, Euro Yen. We said Euro Yen T1 is out, not bad, to cover the stop on runner. So T1 was out, target 1 was out on the Euro Yen, which I called it this morning. And the reason I called it is right here because of the magenta line showed up. You see this? You see that? I marked the entry and I marked the level and everything. And I gave it to them in details right here. Long from this price, stop at this price, and this is your first target. So first target was taken. And then after we moved it into 40 ticks profit, then this is what I said, moving the stop loss to break even. Move stop loss to entry. Not randomly, okay? And the Japanese yen short that it's running now, if I look at it on the side, which is the futures contract, it was about 50, 60 ticks in profit. Now it's about 40 ticks going down. It's another maybe 60, 70 ticks before it reaches target. Okay, so that's how we look at these markets. This is a very simple, very straightforward method, but folks, it takes the following. Once you become a trial member, I'm sure you will like what you see. Again, trial is for free. Nobody will force you anything. If you don't like it, you go back to, if you don't like it, you just, go back to this channel, which is always available to you. The trial is you get into our live trade room, which is twice a week. It's Thursdays, which is today, and Tuesdays. Today, I just finished with my members and I logged into this webinar. Okay. But we have 24/7 calls on Telegram. These will come on your phone. So if you get trial, you will be a member of all these channels and the live trade room as well. If you don't like what you see, if you don't like the membership, you just go back and become just a member here. So you'll still get some notes, some advices, some follow-ups, and some calls as well, okay? But if you become a full member, here's what you get. First of all, you get the room, live trade room links monthly. You'll get levels, detailed levels of education. Level 1, very basic. It shows you how to install the indicators, what they mean, how to use them. 8 videos in level 1. Level 2, starting point, okay? Volume reading, okay? Traps reading. Level 3 is more advanced. See, crash course on volume profile is very important. And then using it on spot Forex besides the futures as well. Level 4, using volume profile. Here, scalping, traps, knives, what do they mean? Poke in, poke out, all these methods that we use for trading. But we have the ACE method, we have some scalping teaching here as well. However, we have the main important videos after you learn the level 1 or 2 or 1, 2, and 3 is basically recorded training. Recorded training is most important that I see it because it comes from our live sessions. And you see we have 10 videos here, and we have, this is very comprehensive. Okay, and we have 3 videos here. So this is very comprehensive. This is not something that you would learn in a day or two. It will take time. It will take cleansing from your old habits, getting used to reading the volume profile, getting used to letting go of trades. For example, if I am trying to where's the Nasdaq? Here. Okay. If I'm trying to find a short on the Nasdaq, I'm expecting the Nasdaq to come down to these levels. Okay, expecting the Nasdaq to come down. If I'm seeing it coming down, that is anticipating the market. Am I confirmed to take it short? No. I will spot a level. I will go back to the daily. I will spot a level. Maybe it's already missed. I think 11,900 is already missed. I'm not sure. So I'm looking for something short from here to here. Now, if it goes back and touches it, that's great because it did not touch it exactly. But if it doesn't touch it, it's missed. Am I going to go in? No, I don't chase. And that's very important. Patience is key in all this. Okay? You have to be very patient. You have to learn how to respect volume profile, and you have to learn how to get your stop outs out of it. You have to learn what is your entry, what is your stop to the tick exactly. There's no playing games with this, folks. It is what it is. You have to respect it. You have to learn it. And if you are a person who loves his or her indicators that you purchased or learned, that's fine. It's absolutely fine. But to start with, you learn this volume method, and then you can put them on top of the volume profile. You will see how they work nicely. You will understand why they're working. Okay? There is continuation zone, there is like a rejection zone, every single thing in this volume profile means something. Okay? Like the shape, the color. I don't trade them all. Sometimes I let go. Like I would say there is nothing here. It's just hesitation, and it turns out to be hesitation, just like I mentioned. Okay, so you have to be very, very careful, and you have to be very educated in trading to actually trade live money. Okay, and other than that, folks, I will introduce you to some of the instruments that we trade. Nat gas, we traded in the spot market, which is a nat gas CFD, and we also traded in the futures market. U.S. oil, which is crude oil, right? Both same thing. U.S. oil and crude oil. Silver, same thing. And you see how these magenta lines push the market up on silver, for example. Gold, same thing. We have gold futures, okay, and we have gold spot. This is futures, and this is the spot. You see how the gold spot, you see how this magenta line initially, you see this, how it moved it up big time. NASDAQ, we had a big move last month. You see this magenta line? This was my entry on the NASDAQ for a massive run. Dow, same thing, spot and futures, okay? Russell, same thing, spot and futures, okay? This is Russell on the futures market. And you see how many magenta lines I have here? Because, you know, sometimes you scalp these. So I can easily adjust it. I go to studies, I go to SAL indicator, and I will adjust it from 30 to maybe 10. I just need to see 10 of them. Okay, for more less trading if you feel like you're trading a lot. You see, just minimize it to 10 levels. Okay, these are very important levels to pay attention to. SPX 500, which is ES, which is the E-mini S&P, same thing. Okay, and other than that, then this is the Bitcoin. which I don't look at often, but it is there. Now I'm open for questions. Anna, if there's any questions, please let me know. Let me see if I have anything to add while we're waiting for questions.
There is few questions. Do you want me to help you, or you can see the questions
Go ahead.
box?
Let me see.
Hey Simon, two of my friends are your members and they speak highly of you and they told me about the trials. Can you please tell me how long the trial period is?
Oh, I had the same question yesterday. Nice. A trial, it's gonna be between you and our sales manager, but usually it's 2 weeks. Sometimes I've seen it go to 3 weeks or a month. But yeah, it's I think minimum 2 weeks. You will access all these channels. You will have all the signals, and if you miss a signal, you can basically go to the timestamp. The date is there, and you will see, and you can compare it to your charts and see it. And also, you'll have access to the room as well, twice a week, live trade room from 9 a.m. to 11 a.m. I'll do top-down analysis in front of you, and you will see how I do it.
The next question is, so the magenta line is drawing ahead of time before the actual move?
Yes, yes, it's there. It's magenta line is basically. Let me show you. Magenta lines are nothing but volume that is coming in and out of the market. It's nothing. I mean, it is before the move. You see it before the move. There's a lot of attraction here, and there's attraction below. But see, and there was 3 lines here. Now it's 4 lines. Yes, it's very dynamic. But this is on a very fast instrument, the Russell and futures. For the Forex, I use one level and I use it for swing trading only because I cannot do multiple trades on multiple instruments at the same time. So I focus swings on futures and Forex, but on the futures, I do sometimes midterm trades, like smaller trades, 100, 200 ticks, etc.
Thank you. The next question, which platform you use?
The good question, Sierra charts, because well, we support NinjaTrader as well. We have the indicators on it, NinjaTrader 7, not 8. There's a third party that you could buy your NinjaTrader 8 indicators from, but Sierra charts is because it's very simple, very easy on your computer. The SAL indicator only works with Sierra charts because of the way it was structured. Plus, NinjaTrader cannot. I don't think it can handle 20 instruments going back 5,000 days. Each instrument has 6 to 10 charts. So that's the reason. So Sierra charts, I use that for that reason.
Thank you. One more question. I don't like trade alerts since you need to be in front of charts. Will I learn how to trade so I can call trades myself?
Yes, I showed the comprehensive education page that is available to all members. If you see, if you become a member, there's a curve of learning. It will take maybe 2 weeks, 3 weeks, a month, but it's your pace. The membership that we offer is permanent, so you can take your time. All these levels, and we have live trade room, and we have amazing members to help out, and I'm here to help as well.
How to get to the Telegram? I just put a link into the chat box and I will send you this separately. And the next question, can I follow your trade calls and how easy is to follow the calls?
You can follow my trade calls, but I am not, I don't offer just trade calls. I offer a full membership, but my members follow my calls. Of course, they follow them to the tick. And some of them actually decided to follow them blindly. I will give you a signal ahead of time. When I do, I'll tell you how easy it is. Easiest thing to notice. You see, on NASDAQ, for example, I said I have a do or die level. No, this is do or die level. And I said I'm just expecting a long from here. So once you see this chart, you mark your charts as well. So once the market hits this chart, this level, you know if it's not, let's say, midnight or after, it's not something, if I'm available, I will, once I see confirmation, I will call it. Okay, I will say get ready. We have the trade is coming. So I'll give you multiple heads ups, and I will give you information ahead of time. Here, an example. I was looking for a short on RTY and then long from here. So I will give you these levels ahead of time. You mark them on your chart. If you are educated on the way I trade and the way I call my trades, you don't, sometimes if I'm not available, if I'm in a break, lunch or dinner, or maybe it's a different time zone, you can take them yourself. It's very easy. Next.
Let me check. I don't see any more questions coming in yet.
All right. So the next presenter can start if they want.
Please type 1 if you have a question for Simon, and we can give you a minute to type it in. Yes, we are waiting for question from TJ. And I would like to remind everyone that this session will be recorded and sent to your email. What is the cost?
Oh, it's on the website. But as I mentioned, my sales manager always offers discounts and different types of memberships. If you go to the website, there's the regular pricing, resources, membership right here. If you see it, it's in green, memberships, and you have it's a permanent membership, so you don't pay again. Currently, we have a special at 6,500. But you can always talk to the sales manager with payment plans if you want, or if you want a further discount. That's between you and him. I don't get involved in selling. Okay, we don't do monthly, we don't do annually. This is a permanent membership. I have members with me since 2004. Trial, it's free, George. Trial is free. And TJ, the trial, I don't need to post it. It's right on, if you go to the website, if you go to the front page of the website, Trader Institute, is right here. Right here. Get started. Okay, and I think any page you link to, I think it has the same. Yeah, and it's in the handout that Anna will give you. Okay. Thank you, everybody. I really appreciate.
Good morning. I'm glad everybody's here. Yeah, this is really excellent time of year. Good to be regrouping, getting ready to close out the year strong, and start off the next year, 2021, in good fashion. Rocking and rolling instead of starting from scratch. Now, this presentation I've got for you today, this is a little bit higher level stuff. This isn't, getting into the weeds, with, indicators and price points and all that kind of stuff. This is, helping you with being the owner of your trading business, because it's really important. I mean, I don't know if you follow, if you read and, study business stuff, but like Michael Gerber said in the E-Myth Revisited, pretty famous book. He was the guy that coined the phrase, to make sure that you take time to work on your business and not always just in your business. And with trading, especially, it's really easy to get caught up, on all the cool sounding strategies and, indicators and stuff that's going on, all the, the day-to-day details. And and noise, but it's really important to, periodically step back and take a look at your business, take a look at your trading as the business that it is. And the rewards are good. I mean, this is part of the 20% that gets 80% of your results, and really, where you can have the best leverage of your time is when you take time to focus on working on your business. And so that's what we're going to do today. I wanted to take that just brief little sojourn there to, give you a chance to mentally shift gears. I mean, we've been looking at the charts and stuff, which is cool. But now it's time to kind of shift over and move into business owner mode. And this is really going to be helpful because not only do I coach traders, I've been a business consultant for over 30 years, helping people start up businesses and fix existing businesses, working with small businesses, anywhere from raw startups at $0 up to 8 and 9 figure businesses. And with trading, if you treat it as a business, and especially if you go ahead and recognize that when you started trading it as a startup, this can really work to your advantage and have a lot of benefits if you're, if you raise your awareness to this and pay attention to the different ways that this aspect of trading, really comes into play in your overall results, both short-term and especially long-term. So let's go ahead and jump right into it. This is the secrets to a successful trading startup, the key milestones of the shortest path to sustained profits. This is presented by McAboy of Inside Out Trading. That would be me. And, since we are talking about trading, I do have to include this disclaimer. As you know, trading involves substantial financial risk. This presentation is for education purposes only and is not intended to induce anyone to initiate any investment or trade. I strongly discourage people from trading until they really are truly and properly prepared. Because the thing is, your trading results are your responsibility, and to be responsible about it, of course. Not everybody is, so it's good to have the reminder. Now, why should you even bother with this? I mean, really, the thing is, like I said, trading is your business. It's not really any different than if you own, a restaurant or a car dealership or a law firm or a large software company. This is a business of equal merit and significance, and it's important that that you treat it that way. I mean, that's why the phrase is there, to treat your trading as a business, because it is a real business. And yeah, like I said, this is one where you started it from scratch, so it really is a startup business. Now, okay. The thing is, just like with any other business, you are investing a significant amount of money in this, and you want to make sure that it does turn into a real asset, not just a hobby or something that you did for a while, but a real asset that produces reliably, like you would want from a business, both now and well into the future. You want a successful business, and that's really why you got into trading. It wasn't just something to do to make some money. You want an asset that's going to serve you and provide. So the stakes here really, as far as if you start it up right, you have a pretty good chance of succeeding. A lot of businesses, most businesses fail, both trading and otherwise. But if you start it up right, that's where you have your best chance of succeeding. And the thing is, if you start up wrong, yes, the odds are severely against you regardless of the business, but especially in trading, there's so many ways to screw it up and kill your business. So the impact, really, if you start your trading business right, the cool thing is you'll get sustainably profitable probably 10 times faster than if you're going the trial and error method and just kind of figuring it out as you go. Doing a proper startup is just, it makes such a huge difference on the speed to sustainable profits. And if also, when you start it up right, you're likely to be making 10 times more money just a few years from now than if you go trial and error. And this isn't just my opinion. This is after working with traders. I've been doing this for over 14, almost 15 years now. And again, working with small businesses, I mean, the treating your trading and your business properly, and especially tending to the startup phase and all this, it really does make this big of a difference. It really does. This isn't just exaggeration. Now, there are several trading wisdoms that you've heard, And yes, treat your trading as a business is one of the best ones because it is truly a business. I mean, it's your business. And I mean, you might say, well, is it really a business? I mean, I don't have any employees, I don't have any vendors to deal with. But the thing is, trading is not just a way to make money. If you look around you, everything around you that's not, from nature, the computer you're looking at, the internet that you're hooked up to, the clothes you're wearing, the desk that you're sitting on, the chair you're sitting on, the walls, the building, everything that you're looking at represents a business where somebody had an idea saying, hey, I can do that and make money at it. And trading is no different. Okay, what really is a business then? Well, a business really is any ongoing activity that's engaged for profit. Anything, like I said, everything that you're looking at, everything that you're using in your daily life that's man-made is a business. It represents a business. That's what you're looking at. Now, every business involves a certain amount of risk and has certain requirements for success. And it's important that, again, people are aware of this. Now, trading is an ideal business. It's unique in many regards. And these aspects that make it unique are your advantages. So we're going to take a quick look at this because from a business perspective, yes, trading is wonderful. And if you're aware of these things and you attend to them, you don't just say, oh, that's nice, and then you forget about it, but you actually attend to them. These are reasons the odds really should be in your favor, and everybody that gets into trading. And here's what I'm talking about. I mean, your first advantage is the low barriers to entry. Unlike other businesses, even franchises take anywhere from $500,000 to a couple $1 million. With trading, real low capital requirements. You don't have to get Series 6 licensing to get started. I mean, you can literally be started in hours with just a few $100, which is really cool. Very low barriers to entry. Advantage number 2, you have 100% control. You don't have any employees to worry about. You don't have to worry about customers. It's just you and the markets, which is excellent. Next advantage, number 3, it's really infinitely scalable. You can start really small, like I said, a few $100, and you can scale it clear up to 8 digits and never have to really, open up a second location, hire more people, buy more equipment, or any of that kind of stuff. There are no additional resources really needed aside from your capital. And again, so if you scale it up, you can do it, and that's really cool. Again, it's almost infinitely scalable. Now, advantage number 4, as far as getting into this business and taking advantage of all the trading offers, your range of involvement, you have a very wide range on your choice. You can be completely passive. You can hand your money over to somebody else and have them trade your account for you, and so you get to take advantage of the trading function and how it operates, and completely passive. You can be totally absorbed in it, where like with Forex, where you can trade pretty much around the clock and just live trading, and anywhere in between, which is really cool. From a business perspective, you have that ability. Advantage number 5, of course, you're not geographically limited, unlike a brick and mortar business or a service business. I mean, you can travel the world and trade. You can travel. I mean, you can be gone all the time, or stay at home, anywhere in between. Again, you have the entire range of choices. Now, this one's really cool, and this is. I want to make sure you really pay attention to this. This is important. Breaks do not diminish your business. With any other business where you're involved with customers and employees and that kind of stuff, if you take a break from your business, let's say you decide to take a month off, your health, you got a personal matter to attend to, some family issue, whatever, or you want to take 3 months or 6 months off. If you take a break like that, it can kill the business. But with trading, you can take breaks anytime you want. You can take off every other week if you want. You can take off every other month. You can take off half the year. You can take breaks anytime you feel like it, as often as you feel like it, and for as long as you like, and you can come right back, and the markets will welcome you back as if you never left. And that's really excellent to know that you can take breaks from your business anytime you feel like it. This is a big deal. Now, advantage number 7, the more the merrier. Most any other business, other people enter that business, it's more competition, makes it tough. But here, more people entering is good because it adds liquidity to the marketplace, and provides more capital, again, the liquidity. So more people entering really does not decrease the opportunity, it increases it. Now, advantage number 8, And again, from a business perspective, the risking money perspective of any business venture, with trading, one of the really cool things is you can test what you're doing, what you want to do. If you've got an idea, you can test it with zero risk in the real world and see how well it works. You can't do this in any other business that involves working with people, customers. With those businesses, you have to put some time and money, and you have to put something out there to test it, or otherwise it's just in theory. But here you can test for real, again, with zero risk, which is huge. What do we got? Okay. Questions? Sorry about that. Just the screen was blinking at me saying that there were questions. Okay, back to it. So, all right, as far as testing things, yes, we can do this. We can test for real, which is fantastic. Advantage number 9, we have tremendous flexibility. If what you're doing isn't working, let's say you've been day trading full time and you're just burnt out and you want to switch to trading end of day or once a week, very part time, set and forget kind of trading, bam, do it. You don't have to rebuild the store. You don't have to change all your inventory, all that kind of stuff. You can change tomorrow. And you want to change again next week? You can't. You can change whenever you want and as often as you want, and that is really cool from a business perspective. And advantage number 10. And again, this is huge. Again, another reason that odds should be in everybody's favor is you have proven business models, so to speak, that are readily available. There are tons of successful, traders from the past several decades who've written books. They've laid out their entire everything, their system, their story, the whole 9 yards. And so the roadmap to how to use this system. I mean, like Darvis and a whole bunch of other traders, like I said, they've shared everything. So you don't have to reinvent the wheel. You can just copy what already works, and it's all readily available, which is cool. Now, here's the thing. I mean, these are your advantages. These are reasons that you really should succeed, and it shouldn't be difficult. I mean, the odds really are in your favor if you'll pay attention to these and leverage them. I mean, from a business perspective, these are huge. Any other business, you don't have these advantages pretty much. So, now, the thing is, well, trading is unique, like we were just talking about. It's got these advantages over other businesses. It also has, similarities to every other business. I mean, because any other business that's a reliable business, as in you can, look ahead over the next year and know what to expect from it for the most part. All reliable businesses require a certain amount of planning. They require organization. I mean, how can you have anything that's, how can you have anything be reliable if it's not organized, if it's just, all chaotic? That isn't going to work. So it has to be organized. Things need to be systemized. And that's why everybody, likes talking about trading systems and all this kind of stuff, kind of forgetting the difference between a strategy and a system. We're going to talk about that here shortly. But the thing is, of course, you have to have systemization so that things are, consistent and repeatable. And that's where you get your reliability from. Is the systemization gives you that repeatability that you're looking for. You also have to have financial controls. You can't just, be trading on a whim, all over the place. You got to have goals, got to have, some budgets and targets and all that kind of stuff. In other words, you do have to have some management over the business. And all reliable businesses require these things. If you're missing any of these, your business will suffer. And your results, and especially the reliability, are going to, be compromised. So, another similarity looking between trading and other types of businesses, you look at 90% of all new businesses, have a high failure rate. Same thing with traders. And why is this? Let's take a quick look at this because this is important as well. Again, you're the investor and owner of your trading business. So let's go ahead and take a look at the seven common causes of failure for both businesses and traders. I mean, these are primary contributors. There's usually more than one, but these are like the big ones. So let's just go ahead and go through them real quick. I mean, you got common cause number 7, and we're going to count them down, is lack of startup capital. And the problem is, the business dies before it can sustain itself. I mean, again, we're talking startups. So it's not one where, the business was already running and humming right along and taking care of itself, and you're coming in and buying the existing business. You're starting it up. If you don't have enough startup capital, one of the big problems is not, okay, let's say even if the business doesn't, hasn't died yet, it creates financial pressures if you don't have enough startup capital. Again, it doesn't matter if it's trading or any other business. Lack of startup capital is a huge problem, a common cause of failure. Another one is little or no business experience. A lot of people jump into trading and their whole life they've worked for somebody else. They've been an employee. And so that's the whole mentality that they have and the perspectives that they have is they know the business and the working world from an employee's perspective, but not from running a business. And that's the thing. One of my favorite questions to ask people when they come to me for help is I'll ask them, have you ever started up and run a business of your own? And if they have, that tells me that they've gone through a lot of learning curves that are necessary to be successful in trading. And if they haven't, then that tells me that they've got 2 learning curves to go through. They have to learn how to start up and run a business, and they have to learn trading. So this is a really big deal. I mean, if somebody is trying to start up a business and you've never started up or run a business before, that's a huge thing. And unfortunately, yes, most never have. Common cause number 5, lack of industry experience. I don't know why, but it seems like I get a lot of software engineers come to me, or engineers in general. And the thing is, well, they're smart and they've got good, experience in their industry. They don't have any experience in this industry, buying and selling securities. It's an entirely different industry. And so lacking that industry, the industry experience, and again, referring to Michael Gerber, he calls it, doing the thing of the business, the trading part. If you've been an engineer or, you've been, working in construction or whatever, that's the thing of that business. But when you come over to trading, it's a whole different thing that's at the core of the business. And if you don't have any experience with this, that can make it really rough to get it started. Now, it's a little, this phenomenon is a little less common in brick and mortar, but in trading, it's really common because there aren't too many occupations that prepare you for trading and give you transferable skills. Now, common cause number 4, and again, like I said, if you've never started a business before, taking over another business or managing an existing business is one thing, but starting one up from scratch, if you've never done it before, it can be really tough. I mean, again, it's different from running an established business, and there's a specific process that exists to start up a business, and it requires a completely different skill set from working for somebody else or running an existing business. Common cause number 3. It's a lack of a business plan where, you've been able to think it through and actually put together a real business plan, not just, I want to make a lot of money. Lacking a business plan, this is a huge one because if you don't have a good working business plan, you're left with trial and error to try to figure out, how you're going to get to your goals. And the problem with this is tremendous waste occurs with trial and error and not having a plan. And in this waste, you waste both time, you waste tons of resources, you waste emotional capital and drive and momentum. And the waste is really, it kills businesses. It really does. So the business plan is critical. Now, common cause number 2, this kind of goes hand in hand with the plan, but taking too long to get to profitability. I mean, you want to get the business to the point where it's sustaining itself. You're not having to continue to fund it. You want to get it where it's, mature and self-sustaining as quickly as possible. And it's really critical to minimize this. From the standpoint of, who wants it to take forever anyway, but just from the survivability of the business, it's really a big deal to make sure that we minimize the time to profitability. And common cause number 1, really, and this is one of the main reasons that I started, helping other traders back in 2006, is a lack of good, knowledgeable help. I had an understanding of the nature of the whole business. People look at trading and it's like, oh, a good way to make some money. It's like, no, it's a business. And just, it doesn't matter if you're in construction, if you're in, manufacturing, if you're in a service business, if you're in trading, if you're in real estate, you have to understand the nature of the business really to do well with it. And with trading, there isn't much good help out there. There's tons of people got clever ideas on how to, the strategies to use. But, as far as, starting up and running a good business and growing it into a, 6, 7, 8-figure business, that is that's what you want. You're wanting to build wealth here. Well, the lack of good, knowledgeable help. And the biggest thing is, I found it true for myself, find it true for almost everybody else, you're left to figure it out all by yourself. That sucks. And plus, of course, there's all the garbage out there and, misinformation. And so a whole lot of people are often misled by those that don't know any better, or they're scammers and they just don't care. They know better, but they don't care. They just, they're to, sell their signal service or whatever, and, move on to the next, victim. So, when you're left to, do all this on your own without good help, that's really one of the biggest problems in trading. it's again, low barriers to entry. Anybody can just stroll on in here. If you got money to open an account, you can start trading right away. And there's not really any good help, to help you start up and grow a really solid, again, asset, a financial asset of your own, to have for, your retirement and, just in the future. So anyway, the thing is, it's not easy. I mean, starting up any business can be tough. It's really tough without guidance, and it's even tougher without with all the bad information and the scammers out there. So here's one thing that we're going to do, and going back to the title of the presentation, we're going to look at the different stages because it's helpful to start with understanding. There are different stages and different milestones, that are achieved at each. And one of the biggest problems is everybody seems, again, and this is due to the lack of guidance, everybody thinks, all right, all I got to need to do is I need to fund an account and find a system, and bam, I'm going to jump straight to a mature money-making operation. No, there are stages and steps. And if you try to skip the steps, all it does is create problems and frustration. So let's go ahead and take a look at the different stages of a business. Now, these are applicable to any business, but we're looking at it in the trading context. And the first one is really, it's called ideating. And that's where you first get the idea to become a trader and invest in a trading business. It's like, oh, okay, I've got this money over here. I don't want to just sit in my 401k, making a whole 7% a year. I want to do better. I want something that I can be involved with, and it can give me much better returns. And so you get that that idea, and then you're like, okay, well, I've never traded before. This is new, so you got to get familiar with the place, so to speak. How things work in the trading world. Maybe do some reading, read some articles, maybe get a couple of books, watch some YouTube videos, attend some webinars. And so the first stage is really where you're working on developing the idea. You really don't even have any idea how you're going to do it first. You just have the idea. Okay, I want to do something with this money. Trading is how I want to pursue it. So stage two is where now you've got your idea, and you're starting to do some research. You're thinking about your objectives. What do I want to do? Okay, I'm starting to understand trading now. I can trade stocks, futures, ETFs, Forex. Got all these different things I could trade. There's different strategies. I got the whole range of how involved I want to be, all that kind of stuff. And okay, so these are the strategies that make sense to me. And so then you start looking for the different models, so to speak. Do you want to be a day trader? Do you want to be a swing trader? Do you want to be a short term? And then you start, once you're starting to get some of this sorted out, and you've done some research to see how things are accomplished, then you start maybe setting a timeline for your goals, and moving forward with that. In stage three, now it's like, okay, I'm kind of it's starting to come together as far as how I'm wanting to build what I want here. And now we're moving into the commitment stage. Now, in a non-trading business, this is where you would create a prototype and work toward what they call a minimum viable product, where it's like, okay, I've got this idea for this thing, and now I've got to make one so that I can kind of test it, see what people think of, and that kind of stuff. Well, in trading, instead of coming up with a minimum viable product or service, you're working with a trading strategy. And again, once you've got a general strategy figured out, I want to be a day trader, trading futures. Now you're going to look at methods, to see what's going to be a good fit for you. And again, but you're committing. You're saying, all right, now I'm going to step in and I'm going to start getting more involved here, getting a little more hands-on. In stage four, this is where, okay, now in a non-trading business, you're wanting to validate your product market fit or establish what they call proof of concept. That yes, this is an idea that actually is going to work. Well, in trading, it's kind of the same thing. This is where you confirm your system's ability to deliver and meet your financial objectives. Once you settle on your strategy and you say, all right, I've decided on the system, this specific method that I'm going to use. Now I need to test it and validate it and say and make sure that yes, it is going to work, and I'm going to know how well it works. And so in this stage, validation, this is a really critical stage. Now, once you get through validation and you say, all right, yeah, it's proven that okay, in the real world it actually will work. And so here now you're wanting to do more of what's working, and with your trading, it's where you're going to tweak it and refine it. and really, start looking to scaling it up, where you're trading with more contracts and bigger positions, and your whole focus is on growth. It's like, yeah, cool, I got something that's working now. Now I want to go ahead and start growing my account. Again, trading bigger, really start ramping things up. And then in the final stage, the sixth stage is where, okay, now, you've established success with this particular method. Now you want to expand what you're doing. And now you start looking to apply the same process to other methods, and maybe trading in different areas, shifting from because the different stages, your very first stage is, so you're looking at cash flow, and then the second one is you're looking to maximize profit, and then the third one is stability and just overall growth, and broadening, making your business more robust. So now you're going to be looking for new trading methods and strategies, and really broadening what you can do. So now, instead of just having this one method that works, now you want to start expanding and saying, okay, this method works for this particular marketplace and under these conditions. Now I want to be able to trade no matter what's going on, and in different markets and that kind of stuff, so that no matter what's going on, I can take advantage of circumstances. And that's what goes on in expansion, where you really just become a real well-rounded and robust trader, so that no matter what's going on, you're well positioned to take care of it, to take advantage of it. So that's what this is really about. Is that those are the stages that you want to go through. Now, in planning a successful startup, of course, the plan, whatever you start with, and everybody will recognize this, whether it's military or business or trading. The plan that you start with is not the one that you end with. It's going to require some flexibility and adaptation along the way, because things are going to happen. You're going to find some things that you anticipated. They're different when you run into them. And the main thing is, you really do want to plan it, though. Even though your plan is going to change, you still want to plan it out as best you can, because success is not going to happen by chance. And really, if you go, let's say you're starting a business, you're starting a trading business. If you go to a venture capitalist with a startup business idea, they will insist, absolutely 100% insist, that you have a business plan, even if it's likely to change. They understand that, because they know that without a plan, your odds of failure are high, and they don't want to mess with that. So if you show up without a plan, you're not going to get the time of day, you're not going to get any money. They're just going to say, come back later with a plan, or don't come back. And really, as the owner investor of your trading business, you want to do the same thing. I mean, because again, if you have no plan, that's really bad odds. Trial and error and figuring out as you go. Again, VCs, the whole industry's learned the hard way. If you have no plan, you go on trial and error, it's just going to be way costly, take too long, really bad odds. And this is why so many startups never make it. They run out of money and, of course, a drive before they ever get to sustainable profits. And that's huge. And you don't want that to happen to you. Because the thing is, this is your business. This isn't just, you're taking some money down to Vegas for the weekend. This is your business. You're wanting it to be, you're an investor here in your trading business. And you want every possible advantage that you can, of course, and at the same time, you want to avoid unnecessary waste. I mean, if you're putting, $10, $25, $50, $100,000 out there, you don't even want to waste, $1,000 or $5,000. You don't want to waste any of it, with your money unnecessarily, where it's just plain wasted. You want to make sure that it's all, being properly and wisely applied. Now, one thing that a lot of people don't understand is, whatever it is you've been doing for your career, whether you're a dentist or a doctor or accountant, whatever, when you chose to step into trading, you moved from that role. Now you promoted yourself into numerous roles in becoming a trader and starting up your own business. And we're going to take a look at these roles, and it's important, again, just from helping you be successful here, it's really important that you understand these different roles that you have and the different functions and requirements that they have, because each of them really contributes to good business. And if you fail to acknowledge them and take care of them, again, there's a price to be paid. Now, the very first role, of course, you were the business investor. Before you started trading, you're the one sitting there saying, hey, I've got money to invest, and I'm the venture capitalist, and okay, I'm going to put my money into trading. Now, you had a lot of choices. There were tons of things you could do, but you chose trading, and so, okay, but you're the business investor here. And if nobody, if you had never invested in another business before, and nobody ever taught you about it, okay, again, this is one where you're lacking experience in this role. And it's good to recognize that. There's nothing wrong with it, but it's important to recognize it, that yes, you actually are a business investor here. The second role that you're in is, okay, I'm starting up a trading business. That makes you the business planner. And, creating a proper working and effective business plan. Again, I love asking people, if they've ever done it before, because if they haven't, it's a significant task. It can be very daunting. And a lot of people, they just want to skip, and it's like, I just want to get to making money. I don't want to, plan it out. But that's a path that has a high price tag. Creating a proper working and effective business plan is crucial, and it does entail specific knowledge and a specific skill set. And there's just a very specific process to it as well, as far as planning out the business. Now, we looked at the milestones, and I wanted to give that to you to help you understand that. Now, the thing is, every industry is unique and has its unique qualities, but the process that we looked at, those are the general stages and milestones, that you need in planning a business. The third role is you're the owner and manager of your business. You're not just the trader, you're actually the owner and manager. That means you have financial responsibility for everything that's going on. You have to figure out, your operation, how and when you're going to trade, what you're going to trade, the monies, all the stuff that has to do with the operation of your business. That's all your responsibility as owner and manager. So that, you're the organizer. You're also the systemizer of things. How well things get systemized in your business and made consistent. Is on you as well. That's another hat that you wear. Risk management. Now, this one, there's several different levels to risk management. I mean, prior to trading, you had to, like I said, before you even decided to become a trader, you had a lot of choices. So you had to weigh the risk of one opportunity versus another, compared to trading and the other options that you had. As you're running the business, you have risk management to take care of. So you have it at the business level. And then, of course, on all the individual trades, you have to manage risk. So risk management is a huge role, and it's on different levels. Role number 5, of course, you as the trader. Now, this is the one role where it should be approached as an employee, not where you're being all creative and everything. It's like, you're coming in here, follow the rules. That's your job. Come in here, trade, follow the rules. That's it. Don't worry about the money. Don't worry about this, that, or the other thing. Just follow the rules and do your job. And that's the role of the trader. Certainly not all there is to the business. I mean, you're also, in being the owner of a trading business, you're the bookkeeper. That means you're keeping the books, you're doing the budgeting, you're doing the tax prep, all that kind of stuff. You're also in the role of quality assurance, documenting things, whether it's procedures and task lists and schedules, or reviews and all that kind of stuff. You're the one whose job is documentation. Problem solving, that falls under quality assurance. When things aren't working, solving the problem and putting a solution in place, and of course continuous improvement. So yes, even your trading business, crazy as it might sound, you have a quality function here, and it's an important one to understand. My background is quality assurance. I'm a certified quality engineer, and to me, quality is just good business by design. So to me, this one, it's huge, and it can't be overlooked. Now, another role that oftentimes really kind of gets overlooked as a specific role with a specific skill set is system analyst. A lot of people, they don't even consider it. They say, well, I need a system. So I'll go look at these systems. I'll attend to that webinar, or look at this one on the YouTube videos. They don't even consider that really you're an analyst here. You're not just, you don't want to just go by trial and error, grab this system and try it, grab that system and try it. You really want to develop the skill set where you can evaluate a trading system from a qualitative standpoint, from a functional standpoint, and a performance standpoint, not just trial and error. You want to be able to do all that stuff before you ever risk money with it, because you don't want to be losing money to find out how good a system is. And that's really, for a trading business, this is a must. It really is. You really need to be able to evaluate and analyze and test systems before you risk money with them, just from protecting your capital standpoint. But anyway, the thing is, it's really important that you understand you do have a lot of roles to fulfill. And again, attending to these, from the perspective of, yes, you are the investor in your trading business, you're the owner and the manager, and you have all these other roles, but this is your business and this is your asset to, carry forward and hopefully, generate income and build wealth with. When you can, attend to these things, it just works in your favor, because they all contribute to good business. And when you neglect them, there is a price to be paid, especially, like I said, almost every one of those roles, if you neglect it, it has a high cost. And the thing is, you want to go through them one at a time and, get yourself up to speed, understand the requirements and that kind of stuff. So again, just understanding, yeah, when you're a self-employed business owner, you have a lot of roles to fulfill. Now, don't make the same mistake that a lot of people do. I mean, as far as planning a business and starting a business and managing and growing a business, they all take skill. There's a certain body of knowledge and process for them to be done properly and profitably. And again, this is where lack of good guidance really, has been a big problem for me when I first started out, and so many other traders. And really, again, you want to learn from venture capitalists. I mean, because like you, they invest in startups. And this is one thing that's really important. I don't know if you've ever read a business plan before, but I always thought, when I first heard about this, I thought it interesting that the very first section of a business plan, it doesn't matter if it's, a little, shop down on a corner or a multi-million-dollar corporation, the very first section is the executive summary where you talk about who's going to be doing the startup. The plan is one thing, but one of the main things that venture capitalists look at, I mean, of course, they're going to look at the plan and the idea, but they're really, really, really looking at who's going to be starting up this business. Are they qualified? Do they have any, do they have any past experience? Do they have any training? What skill sets do they bring? What kind of attitude do they have? What kind of aptitude do they have? They're looking at who as much as what. And that's huge, but it's smart. They've learned this. The whole industry has learned this through hard lessons and everything. So yeah, you need a good plan, but you also need to make sure that the person that's going to be doing, the startup and running the business and doing the thing of the business, that they've got proper training. They've got the skills they need to do it well. The smart people, and yes, the people that want the odds in their favor, they get guidance. They put their pride aside and, stop saying, oh, I'm good at, I've been good at other things. I can do this myself. They put their pride aside and they say, yes, I want to get good help because I'm making this successful is more important than me feeling good and, feeling proud. I want a successful business. That's where my priority is. So here's the thing. I mean, again, because, there's been such a lack of good guidance. And I had a lot of people coming to me, starting back in 2007, had people coming to me for help with the business aspects of trading. And so years ago, I created the first version of Trading as Your Business. It's a course that walks you step by step through the whole process of planning out your trading business startup. And it gives you the skills that you need for the different roles. It's a very specialized training just for traders. And the thing is, it makes things easy because, again, it's a step-by-step. It's a very thought out and tried and established process system for doing all this, and makes it really easy. And the big thing is it helps you avoid waste. That's one of the main reasons that I did it, is to help you avoid waste. I mean, we're talking about 8 weeks. It's 8 really easy modules. The first one is where we're just laying the foundation, taking care of the formalities, setting direction. Again, the sorting of things, ideation. The second one is where we take a look at you as the investor and owner of the business, and the skills and the thought processes and the different things you need to think through to handle those roles successfully. And then in module 3, we take a look at you as the trader, the trading analyst, that kind of stuff, those kind of skills where, you're working in the business, you're the manager, but you're also the trader, an analyst, and all that kind of stuff. Module 4 is now where we're bringing our attention to the system, our business model, and the method and everything, and making sure that, yes, it is viable, it is going to work, we'll prove out the concept. And then in module 5, now this is where we're bringing things together, the financials. We actually put together a 12-month financial plan based on real numbers in the real world, so you know for the next year what to realistically expect from your business. And it's a 12-month forecast, and it's really pretty highly accurate. I mean, the margin of error is pretty low on it, which is cool. It gives you tremendous peace of mind just knowing what to expect. In step 6, this is where we make your success sustainable by getting your operation organized and putting the practices and routines and the other things in place that really make it a well-organized and well-managed operation. And then in module 7, we actually bring it all together in a proper business plan that you could take to a venture capitalist and say, here, this is what I want to do. And it's one where it's a viable and actual business plan. And it's one for you to work with, but it's, again, also from an investor standpoint, it lets you know, hey, yeah, this is one that's well thought through, and this is a plan that's likely to succeed. And then module 8 is really helping you mentally adjust to now, instead of dealing with wide open endless possibilities and fog and confusion and all that kind of stuff. Now you've got a whole different mode of operation, and module 8 is really helping you get used to a different mode of operation, so that mentally, yeah, you can stay on this path and not sabotage yourself. So again, it's 8 weeks. It's really just laying everything out, to make it easy for you, and to give you the skills that you need, the processes, the trainings, all that kind of stuff. And a couple of the goals, again, starting a trading up, right, is you want to get to sustainable profits in the shortest time. You want to save yourself headaches, grief. Big thing with traders is regret. I know so many traders, and I went through it myself, where, yeah, you just regret the mistakes, the failures, all that kind of stuff. That sucks. I want to help you avoid that. So you can get started today if you go to tradingisyourbusiness.com. That's real. You can go right there. It's a full page that gives you all kinds of information about it. Also, just put the link in the chat box, so you can go there. Actually, hang on, I'm going to do this for everybody. So the link to go there. And the cool thing is, because you're here on the webinar today, if you use the code STARTUP50, you can get half off. Yeah, 50% off the regular fee. And trust me, investing in yourself and your business in this regard, the ROI is huge. Like I said, a properly planned startup and an organized startup, and where you have the training for the different roles and everything. I've seen it hundreds of times over the years in trading and other businesses. It just has such a huge impact as far as the speed to profitability, your scale of profitability. 10x is quite common. It really is, as far as the difference between an unplanned startup and a well-planned startup. It's massive from time, money, aggravation, grief, regret, all those perspectives. It's huge. Now, again, let's take another quick look at 7 common causes of failure, because you'll see, yeah, these are quite common in trading. You got lack of startup capital, little or no experience, in business, lack of industry experience, never started a business before, even if you've run an established business, lack of a business plan, the time to profitability, and lack of good health. These, I guarantee you, you're looking at these and you're nodding your head to at least one of them, saying, yep, that's a big problem, and probably, yes, common cause of failure. And a lot of traders, they experience more than one of these. So if you got more than one working against you, that's huge. And you really, if your goal is long-term, I've got an asset that's working well for me and it's doing what I wanted in the first place. It's actually realized. This is you want to make sure that you're attending to these. And that's why I put the training program together. So again, go to tradingisyourbusiness.com. The link's in the chat box. Use the code STARTUP, save half off. Yes, I do guarantee the program. If you get into it and you're not happy with it, it's not a good fit, it's not working for you, whatever, let me know. There is a 60-day guarantee, so there's no risk. It's a tiny investment compared to, again, if you're putting $10, $25, $50, $100,000 into your trading business, to drop $500 on a training program that's going to save you tons of grief is a good investment. So we're rolling up on the, that's the end of my presentation. I'm going to take a quick look in the question box, see what questions we have here. So we can get this to work right so I can read the questions. Okay. Well, I'm not seeing any questions. Main question is, okay, as far as the accessing these are online videos that come to you once a week. I do that so that you're paced. You get in the habit of working on your business on a weekly basis, not just in it, trading and trying to make money all the time, but you actually step back, and again, that's part of the training.
Welcome everybody. Today's topic is what it needs to be a trader or investor. I'm going to show you a recipe and all the ingredients needed for you to go forward in your trading and investing endeavors. Before we go into the details, I want to just make you aware of the risk in trading. And here you see me. My name is Thomas Barmann. I also published a couple of books. You usually find them all at Amazon about the topic of trading and investing. And I'm here as a trader and educator, not as a broker, dealer, or financial advisor. Trading and investing, at the end of the day, it's all the same. Just for trading, you have less time because trading, we see day trading, so you open and close a position the same day. Investing, you hold for a little bit longer. In between, we have the swing trading type style where you hold for a couple of days. The key thing is many who come to trading want to start on a trading side, so they want to be 1 minute, 2 minutes, 3 minutes. Look, this is like when you are familiar with the game of chess. This is like you participate in the blitz tournament where you have 5 minutes to play the entire game for making the moves and for thinking. So you better be good at it. So therefore, what we do is we want to make certain that a trader and investor, for whatever you want to do, has the right behavior, the right tools on hand to produce and take a slice of the stock market or the futures market or the forex markets. So we are not tied to one of the asset classes. What we show you here works for all of them, and we always tune everything as a tailor-made suit to you. So if you want to take a slice of the wonderful opportunity of the market, like I have here in the chocolate cake, you need a recipe. And in this recipe, you have different ingredients, and you need to follow a clear-cut plan how to mix them together, and for the time of how to bake them and where to put them in the oven, because else it's not going to work out. You will get a different result than expected. You might get one of those, and a lot of traders then say, okay, it's still a cake, I sugar-coated, I had a couple of wins. That's not where we want to get you. We want to get you to take a slice of the market by following what I share here to you, and I also give you an opportunity, if that was a lot of information that I'm sharing, that you get a little article from me sent to you if you want to, and then you have the information right in front of you. So recipe takes different ingredients, and you see here some of the bars or boxes here are more significant than others, but it takes all of them. Look, in your sugar cake, if you leave the eggs out or the milk, it's not going to be what you expect. And the same here in trading, and I will fill those boxes with information of what needs to be done and what needs to be in your toolbox for going forward. First and foremost, you need to work with a high probability trading system. It gives you indication of where prices move and in which assets. Yeah, regardless if you trade stocks, you want to know, okay, how do I define where to get in or to get out? The same with futures, with forex, or with commodities, whatever you want to do. Yeah, then you have to have risk limited strategies. That's where a lot of people fail. They get drawdowns because they don't know how to puzzle things together so that the max risk of every trade is always defined in advance. And here, caution, it's not defined by a stop. Stops are market stops. And when things moves on the last Black Swan event, some stocks traded to zero. So that means then at 2 cents, maybe your stock gets filled. Very dangerous. So therefore, we believe in only taking risk-limited strategies and work with those and put them forward in the market. And all these together, you need to find the trades somehow either getting catered to you, and there's multiple services that do that, or you have your own service in-house at your computer in your system that relates system, strategy, and trade finding together. And then there's a big bang of all these, trade repair. I'll go a little deeper into that a little later. Why do I talk about it? That gave us the name. Never lost trading is not a promise to never lose a trade. It's the idea of repairing the trade. And so with that, keep your losers small and make consecutive winners. Yeah, very different strategy. Most shoot for the moon, but then have no stop. And so it's the other way around. You have big losers and small winners. And we want to just do the opposite by applying the right methodology. Money management. Point to that. It means how much money do I want to invest at max based on a good risk plan for each of the positions. what can I afford, how many positions can I hold, and how do I invest about at least 80% of my holdings. Because if you overinvest, you have no money for certain of the hedges and things we should apply. In particular, in going forward from today, we're going to go into times of ambiguity, and you better be prepared, because then there is no threat, there's no opportunity in the market if you know how to do things right. Business plan, very essential. It tells you when to trade, when not to trade, and we help you writing that, yeah, so that you know your course of action, and include a financial plan where you say, okay, how often do I trade based on my available time? Which asset classes do I strike on? How many positions will be there? What can I expect from my trading and investing endeavors? And we also work with you on account management. You should put that in too, because many people have a lot of investment in a 401k and you guys don't trade it. We teach in our joint work and our mentorship programs of how to trade all the accounts, because imagine we have a 2008 again and things start sliding. How can you prevent that your account goes to 50% of all your savings that you have right now? Or the same counts for an IRA. But how do we work with an IRA within considering the strategies that are allowed in it? How can we leverage? How can we limit risk? All of this together is a trading plan for a trading business that is needed for you, and we want to share the individual components here today in this presentation. Let's go forward. So the recipe means all of these are necessary. You can't just leave one out, because if you do so, you might get this result, and that's what we don't want for you. We want you to go and take a part of that business. And over the years we are in business, we recognize that traders and investors are always a bit different. So why is that? Because of personality. And so therefore we don't have a standard program. Yeah, our indicators do that, but we tailor make all our mentorships to you as an individual, covering your risk tolerance, your holding preference. So how often do you want to trade? How long do you want to hold positions? The difference in availability. Do you have 1 to 2 hours a day, or do you want to be there 8 hours? The preference to assets. Are you more a futures trader or a stock trader, or do you like options? All of this is always considered. And the account type, where's your money? Is it in IRA? Is it in margin account? Is it in a cash account? Because only when we consider all this, we can put together the menu and the recipe for you to strive for trading success. And that's what we do. And we are more than 10 years in business and made very many traders independent. And that's also important. Independent. After a certain period, you can run on your own. And that's what we intend to. You can run your own trading business on your own. But if you still want to stay in contact with us, this is absolutely doable. But many of the traders that we worked with over the years, they run independent, they do their things because they have all the tools on hand, and they follow what I just shared with you, the recipe to trading success. We did one thing. We are a quantitative house, yeah, so we do quantitative analysis for a lot, and so therefore we calculate it. I'm not going to guide you through all these little bits and details, but we put a weight on all the factors, yeah, starting from price move indication all the way to account management, and made a function out of this. And with that function, what we did here is we said, okay, where do you have a losing proposition as a trader, in which score range? And what we see is most traders are somewhere here, most private investors. They never make it out of the box, and so therefore success is there, but it's random. And what we want to do and encourage you is to get to a success that is provable and repeats itself. One thing in trading is for certain: we deal with a probability. Probability means we're never 100% certain if what we plan comes out like that, but we can control the risk. If you want to read more of what I'm talking about here, write me an email to contact@neverlosttrading.com, subject article. I just wrote an article and put it together in preparation of today's presentation, where I put all this in there. I also talk about AI, which I come later on, artificial intelligence, and how it can help you to substantiate and find good trading opportunities here. So take the chance here, contact@neverlosstrading.com, subject article, because then I know what you want, because there could be also another thing. I'll offer you consulting hour, and we'll do that separately. So let's go ahead and see how a system works. You saw the system component is the most important. If you don't have a good system, if you don't have high probability, then you'll be never getting anywhere, regardless of how you mix the other ingredients. That's the flour that makes the cake. Yeah, so let's go in there and talk about the system components. We are writing the year 2020. And here we have to have a good measurement of the actual of what's going on. Yeah, AI in trading is there, we integrate it, but we don't let AI decide for your trade, so it's not fully automated, and it's not intended to, because we as humans have certain capabilities that supersede the computer, but they are super in finding things and filtering it out. I want to show you today a starter program, we call it tradecolors.com, and our most advanced program, which I call Never Lost Trading Top Line, the top of the line. Yeah, I give you some examples of how these programs work, and I reference to the other factors that you saw on the recipe for trading success, and invite you in to be part of this. What is an AI basic? So you have an indication, something happens, you have algos that filter out which one is good and which one is not. And filter is a good word, because we want to filter out signal from noise, some happening that is random from a happening that leads somewhere. And the key will be the feedback cycle. Yeah, so that the actual is fed back into the new start of the next iteration. Only through that you'll have the opportunity to have a system that constantly resets to actual. And that's very important. Most systems where you just say, like, for example, I trade when the 50-day moving average and the 200 cross to the up or to the downside, it'll not get you anywhere. It's too simple. It doesn't consider the actual. It looks 50 bars back. And so with that, it'll not help you to make good decisions. If trading was that easy, everybody would make money. But it's not. And so therefore, we put ourselves together, and I set myself down for more than 10,000 hours developing this of what I'm offering here today. And as said, I show you two systems, a starter system and an advanced system. Yeah, so algorithmic trading is like a navigation system. So it tells you from the location or destination the distance of which way you want to go. So we are sitting in Fort Lauderdale, and here we put Orlando as our destination out. And you see on the map, we have two choices: take the car and go for 3 hours and 10 minutes, or take the train for 4 hours and 45. And those are the alternatives we have today to choose, or you could also take a bus. Yeah, and then the time is given, and there's a risk. You see right at Boca, we have potential traffic jam, which might infringe our 3 hours and 10 minutes, because if we stand there in the traffic jam for an hour, so then we are basically par to par with the train. But that's just what a navigation instrument should do. How do we translate that in trading? Your system has to give you entry, exit, and stop consecutively without discussion. There must be a clear rule: when do you enter? You cannot interpret it. It has to be there. Buy above or buy at or sell at. There is an exit, positive, when you are a target, and there's a stop. That's when it doesn't work out, and you see our name, Never Stop Loss Trading. There we usually, instead of taking the loss, we try to repair the trade when that is feasible. And so with that, we have a clear price move indications in dollars. We have trading strategies that we apply, and we always work risk limited. So you know from the get-go the maximum amount of money you risk and what your expectancy of the money to make. Yeah, you know also with our systems the min and max time to trade, because this is where a lot of traders fail. Yeah, they extend the time. When a price move is not happening in a certain period of time, then it's over. You must make the call. And with our indicators that I show you, some are 1 to 3 bars, maximum 4, others are 5 to 10 bars, but we always know indication by indication how long am I staying in that trade. And why is it so important? If you're an option trader, you know how much time you need to buy to control the instrument or the underlying. Yeah, so that's the recipe of trading success, starting with the system. risk limiting your strategy, finding those and mixing the trade repair, money management, business planning, and account management, out of which account am I trading, all together to prevent a failure in the result. And now we want to have a slice of the cake, and I want to help you with that and make you an offer later to be part of this, to be consecutively in the market for moving forward and taking a slice of the cake. So algorithmic trading, let's go in. Price moves are erratic. Yeah, so they're not normal distributed. It's a wrong assumption of the statistical model. Yeah, there's a pre-stage of a price move which we can measure, and that's what we do. And we filter out of those which ones are good for entry or exit conditions, as you see it here on the chart. Then there's a buy above 49.74 and carry it out to the target dot on here, the same on the sell side. Yeah, so that's what we do, and that's how we carry things out and forward. Today, I want to show you algorithmic trading with human interaction, because humans are good to filter out what's important out of very many different signals. This is why there is a captain in an airplane. When it gets crucial, he's not going to let the autopilot do the action. The captain takes over, and we want you to be the captain of your decision making, opposite to be fully automatic and just let the computer trade. That's not what we offer. Yeah. So high probability, that's what I talked about. What do I mean with that? It's a predictability at or above 65%. And I'll show you in a little statistical model why that is important for you. Opposite to most systems, look, we programmed all the dojis, haramis, and what all you can have, and also the crossings of moving averages. They all come out between 51 and 55%. They have a slightly positive outlook, but it's not good enough for making money long term, unfortunately. But this is why we're here, to offer you a high probability system, and I put together a very simple model. When you have 20 marbles and you put 13 green ones in, they are winners, and 7 red ones, you have a 65% system. A 55% system would be 11 green ones, winners, and 9 losing trades. So when you pull one marble and you put it back again, there's an experiment which is called Bernoulli experiment, the Swiss mathematicians, and he defined with that, how can I have 6 or more winners out of 10 draws? And you see here, by adding up the probabilities of the individual potential, you have a 75% chance to come out with more winners than losers if you use a 65% system. If you go with the current or common 55% system, your success will be random. And that's what we try to prevent. So introductory system, let's dive in, and I show you a couple of examples, and I help you to read the charts with me. We highlight certain things, and we look at shorter term and longer term opportunities. But just in general, our introductory system colors the bars. Yeah, there's an algorithm behind it that colors the bars and spots potentials for price moves. Yeah, so that you can trade when it matters. Yeah, so see here, okay, here and here, there we would trade because we have 2 of a kind, 2 blue or 2 red ones, and this is giving us an entry condition. Yeah, we have blue for up and we have red for down, and now let's move ahead and see how we can have 65% or better within just the bar coloring based on the algorithm that we follow. I give you first some day trading examples, and then we go to a little longer term example. So first point, so you see your first trading situation up here. Yeah, let me highlight it for you. So here we go. That is the first setup. Yeah, and on that setup, the high of that second candle has to be surpassed in this candle, in the candle to follow. That was the case in here. So we have a trade, and we know at the moment we are trading for 11. That's measured on the last bar, but here actually in the experiment, we traded for 12 points on ES. 12 points on ES, $50 a point, so that's $600 a pop. Yeah, so pretty easy to look at. And so we'll see, okay, it happened here. We came to target, and the target is set to be 3 bars, maximum 4. Yeah, so that's where we came to target. It's easy to see when you see the distance between those boxes here. they're 20 points. Yeah, so easily with 12 points, you saw, okay, here we came to target and made the trade happen. So did it happen again? So how did we continue in situation two? In situation two, we had again an entry condition, but the next candle didn't take out the high of this candle, and we have a buy stop order that we operate with. So therefore we had no trade. Okay, not a problem. We are not here to trade. We trade to follow a clear-cut system. Situation three, yeah, so here entry condition, two blue of a kind after a red sequence, which was not confirmed to the downside. And the candle got in here, so you know this box is 12, we trading for 12, and so this definitely came to target. And the question is, how did we continue on? So situation four, right, occurred after. Yeah, so you see repetition, very important. So you have again here, those two candles boxing out a new opportunity to the upside. And again, in 3 bars, we wanted to be a target and where. And so how is the summary of all these trading endeavors? Yeah, so when we look, situation one, 12 points were made, $600. Situation two, no trade. Situation three, 12 points, another 600. Situation four, $600. So that's $1,800 in a matter of 4 trading days on here within just following the system. And you weren't sweating, you just follow the system where you have the clear entry rule, buy stop, sell stop orders, and I show you in the next charts of how that also works then with the stops and how to put everything in place. I got more examples for you to get excited. Yeah. So here we have a 9,600 tick chart, transactional, and here we trade very simple. We have our stop, we have our entry. One of the two happenings are there: either we get stopped or we get and come to target. So our happening here is for 5 points on the S&P 500, so that's $250, and we want to see the trade situation. So you saw here, again, let me highlight it, 2 of a kind, yeah. After a red bar, we are in, and I made that bar 5 points wide. Yep, okay, perfect, came to target. Next situation, and here was the stop here. So here on that chart, I have the stop in there. Just the stop goes like 2 ticks below that bar where we enter. And we do that again. You see the new candle setup, a red one to the downside, but two blue to the upside. And here the entry was 36. So at 41 and -1 tick, we take our entry. So there we came right to the entry and made another $250. And then that repeats itself within not being stopped, because you also look at this. Are we getting stopped? No, our stop was not infringed. 2 ticks below the low of that candle. That's how we put it. Situation to the short side came right up here. So you see blue candle, 2 red candles, and the low of this candle ticked out in that one. And where's our stop? Up here, but I also let the system now define the stop and point the bar out here. And you saw it took a couple of bars, but also consider the time, yeah, because it's a transactional oriented tick chart. So we took a couple of bars, but we brought that trade home again. So you see one thing in here, we looked at time, now we look at tick, we can look at ranges. The algorithm always repeats itself for whatever you look at, for whatever instrument, and brings you forward into the next trade situation. Like here, I have the NQ, the NASDAQ 100 futures micro contract. And again, I highlighted here the 2 candle setups here in orange. Yeah, so you see the blue and you see the reds, and how they repeat themselves. They were very, very high probability in the last couple of days. It was really hitting hard. But on the base assumption, we say 65% or better. But here I give you all live examples because I renew my charts. You see always October 13. So this is the days when I prepared for today's presentation. I put the effort in to show you real life as it can be. Yeah. So here you see again, these arrows are trading for 50 points. Yeah. One of those boxes is 50 points wide. And so we had 4 phenomenal trades bringing 50 points times 20 home. That's a substantial, nice price move that we put on the chart here. Yeah, and there were the stops, and you saw the stops were not infringed in any of those. Let's go to a little bit longer term trading. Yeah, and look at some examples. Yeah, so we have a weekly chart here for the ES, and I had to take my scribbling off. Yeah, we have a weekly chart for the ES, and on that weekly chart also we have the situations. Yeah, so one of those boxes is 100 points, and that's what we were trading for. And you see here that arrow represents 100 points. Did it come to target? Easy to be seen. Where was the stop? Yep, we hit that. We did it again on here. So there's the two candle color setup. I have to move that one to the left. And here we had it to the downside, and right at the notch, again, we were able to bring these trades home. When you say, look, 100 points, it's wonderful. You trade from a weekly chart, but that's outside my risk tolerance. Then we switch the contract. We always like you to have maximum 2 to 5% risk in one of each of the trades that you take. And we also relate risk and reward, because the chart's going to give it to you where you know where you set your stop and you know where you set your target and how to relate that together. And when it doesn't fit in the contract you look at, we could go here to the micro contract, or we could make an option trade out of the spider where you can participate along the lines with your risk assignment in the trade to the upside or to the downside, regardless of the contract should you hold. Yeah, because we can always swap. The MES, the micro contract, is only 10%, and with calls or puts or verticals, we can trade for a fraction of the overall cost and make it fit for every account. Yeah, here's an example of NVIDIA. They had the setup between September 28 for September 29. There was the setup. Clear-cut rule. In 3 bars, I'm supposed to be at target. The target is known by you at entry. So you follow a clear-cut system. You compare risk to reward. And risk to reward was here $18 risk to $18.78. Favorable, yeah. So, and within that, you saw a lot of the examples now through short-term trading to longer-term trading, where we went into the details with that system, providing you good entries and a clear-cut plan to follow. So this shall help you with trade colors to put all of these into the context, and I have a special offer for you today, because what we do for you, we install the software for you. You get real-time data for free. It's on thinkorswim. You always know your entry, exit, and stop. We help you with the position sizing, and you also have watch list indicators so that you can find your own trades in that system, and you'll learn how to risk limit each of your action, and we put that jointly together all in a written business plan for trading success. So now the question is, what am I investing for it? Yeah, so that's the question. I have a fall special for you. The online price is $2,647. We offer the system for $2,497, but only InvestorExpos special offer. Instead of 4 hours of training, we give you 6 hours of training. That's 2 additional hours. We charge $400 for 1 consulting hour, so that's $800 of value. So you get an extra value when you sign up of $1,000, and you don't have to sign up here and write out of this one. Write me an email, say, I'm interested, I want to see how it performs live. We go through the setups, and then you can make that special offer happening. Why the 2 hours more of training? You want those because we want to give you the total overview of the recipe of trading success to put it into your skill set. Yeah. And here, just a little relation, what you really pay for. 6 hours of trading, $400 an hour, that's $2,400. You pay $2,497. So at the end of the day, for the system, besides the time, and it's individual time, yeah, we work one-on-one with you. Therefore, you get a tutorial, you get a business plan, you get all the knowledge, and you get access to knowing all these little ingredients to make your trading happen. So if you are in for that, write me an email and we set up a personal time for you where you can test us. You can say, I want to look at that time frame and this, that. We'll go through with you so that you know that the product that you get suits your wants and needs. If you're more an advanced trader and you trade multiple accounts and you are higher invested in the market, we have never lost trading top line. We have two versions. I have a special version. We only do that once a year. We're gonna propose to you Never Loss Trading Top Line Lite. Top line is the highest probability setup. With the full program, we have 20 hours of training. With the smaller program that I propose to you today, we have 10 hours. We have 2 months of coaching. We have 2 months of alerts. We have feedback and working with you. The Top Line Lite to the full program doesn't include the scanners, watch list indicators, and seasonality indicator. But if you trade a smaller program, that might be a good suit for you. And you heard the ring. The ring said one of my orders got filled because I pre-program everything. Yeah, so I can be here and the computer works for me with very simple buy stop, sell stop orders. Things are done in the background. You don't need to observe 8 hours a day the program. That's not needed. If you want to, you can. So now I show you with the big program. Imagine you have a 401k plan and it is oriented towards like the S&P 500 average American market in your mix. So that's where most of your money is. How can you control in an easy, somebody is asking, ever, Thomas, stop always 2 ticks. No, it depends. Look, it's 2% of an expected price move above or below. I'll go in that little separate. So it's not always 2 ticks. It depends of which time frame you trade. Yeah. So here you see a simple chart, weekly on Spider. And that's how IRAs, 401ks, if you have longer term holdings, I show you how you can determine pretty easy ins and outs. So on the chart, you see here this line, yeah, the red line. That's our trailing stop. So if the price goes through that, which here happened, yeah, so here, you're supposed to be, if you have a 401k, go in cash. You're supposed to be in cash on a 401k. Yeah? So you saw here that line got infringed. And so therefore, if you have a reverse opportunity, yeah, so that you have a stock or a mutual fund, in that case that goes opposite, that's fine, but most of the plan providers don't provide this. But now let's go and see the situation. So imagine you had gone out here and you had re-entered when the system said, and you had gone in cash here, and here we have another opportunity where you can invest to the upside. So let's play that together. I'll need to go here on this one and say, okay, we were in cash in a week of 3.2, out at 3.40. Yeah, so this is where the stop was. So we'll then reinvest at 280. Yeah, it was above 264, but here let's say 280. We then got stopped, so to speak, at 9.14. At 3.40, we made 60 points. Then we re-entered into the market here on net up 338 as at 3.40 and made another 10. Sum that up. So net, you made 60 additional points with just a couple of trades or a 17% advancement instead of just sitting there and holding your assets. But the system told you, and that's what I'm proposing here to you. The system tells you, and I didn't go short or didn't do anything else like that. I just followed the red lines, getting out, moving to the next. So here's an example for Netflix on a daily chart. Netflix on a daily chart, you see here, there's the trading opportunity by threshold. If the next candle is higher than 553.97, there you enter, and you have 2 targets there, but also we have a rhyme on it. What starts in the light tower, that's the candle with the dot, likes to end at the light tower, that's the candle with the dot. And so that would have ended our session anyhow, but after target 2, we get out. Yeah, so if you got out, you're much wiser because you know you saw what the stock made. And some say, wow, there's a sell signal. Yeah, but get ticked out of the sell signal. There was a buy signal on this one. Yeah, but you were in a trade. I cannot prevent that to be there, but I can teach you that you trade here and not there. And this is why we are working individually with you, looking at what you really want to do and trade. Here was a re-entry, and it's pretty obvious of where we can go because therefore we have all these crossbars or boxes in here tell you, look, there's price accumulation, carry it out to the upside and please be there in 3 bars, which it was. And so this is how mechanic we start into trading, and we help you to pre-program all of this. It's not rocket science. It's simple to put an order if this happens, or if you say, I want to just trade an option on it, we help you to define that. And we'll go into detail. So what does it mean, risk limited strategies? Because there options come into play. Stocks with options give you that ability. Just a stop does not. And option strategies, they're various. We are not taking like a broken wing butterfly, that's all complicated ways. We buy puts and calls on clear-cut directional price indications. We do long verticals and we do short verticals, but that always depends on the chart setup that we are looking at. And you'll learn in the mentorship which one to take over which, and also what's the maximum price you can pay for a put or a call. And if that doesn't work, then you need to move to another strategy. Yeah. Option trading can be complicated, but we decomplex it because we have a clear-cut price move indication. We show you the valued option chain. Not every stock that offers option has one. The repair ability, the maximum premium to pay, or the maximum premium to pay, or the minimum premium to collect, strike price to choose, time to expiration, and strategy. We all bunch that in because we want to make you a complete trader, independent, making good decisions at any of those points. Here you see a day trading chart. Again, I took the ES 2 hours. Do you like that chart, Thomas? Yes, I do. Yeah, and you see here again, we follow target lines. Let me click on a couple of situations. Situation 1, easy, sell, yeah, 3,285, below, bang, done. Target 2 starts in a light tower, ends in a light tower. Did it go further? Doesn't matter. You can trail the stop with that red line if you did, but here I just go mechanics. So then reversal point, yeah, buy here, but look, risk reward on this one is bad. Yeah, 3 times the risk to 1 time the reward. We don't want it. And always up there, you see on our dashboard the relation target stop, risk reward. Is it acceptable, favorable, or risky? If it's risky, you don't want it. Then we had again here the opportunity to go long. Yeah, 2 targets. Target 2 starts in a light tower, ends in a light tower. There's a signal. Yeah. I cannot prevent the signal to be there, but I can teach you to not trade on the second light tower in that. And you see now we are dabbling. We went a little higher, but there was the target. If you took it, there you had to take profit. Rules are rules are rules, and they're learnable. The good thing is to that they are learnable so that you see in every situation of what's going on. And this is why, depending on what you might be interested in, we work 10 or 20 hours with you so that you learn all of this. And everything we do is documented. We teach individually, tailor it to your need, and always record every session, but we have plenty of documentation and material, and definitely we write a business plan with you where you know when to trade and when not, and we consider all those elements in the hours of working together. Yeah, so fall special, yeah, the program top line light, 6,497, 10 hours of trading, $4,000 value, 2 months of coaching and alerts. I had to put $495 on that, $990. Chart program that takes about 4 hours to put that into your account. And so at the end of the day, with all that you're getting, you're paying that for the system. The rest will fill up your knowledge base. Let me look if I have a couple of questions on here that I can pick. Yeah, so hey Thomas, stop always 2 ticks. No, I did that. Yeah, so this far I think I caught up, but surely always Anna helps me if there's questions that are not covered. And let's go ahead then and talk a little about how that all works and why. We are more than 10 years in business. It originated because, you know, I tried so many things out over the years. I did my first trades with 22 and not really made it always consistently work. So therefore I thought I'll work on with my knowledge of filtering technology, math, and all the background. And I was able to develop the never loss trading systems that I'm showing you here today. The idea again comes from never stop loss. Yeah, so therefore we repair trades, and that gives you a big advantage. And we work with algorithms that include AI and are intelligent, considering the action of now in going forward. So if this is for you, yeah, then write us an email and request a consulting hour. We look jointly at what you really like to trade and then work ourselves through. Why do we not teach classes with 10 or 20? Because we want to care about individual preferences. And we recognized very early that mostly 80% of the people, they don't really get it and then they're not happy. We want to make with what we have happy traders and independent traders, and therefore we work one-on-one with you on your specific and best dates. It's also on weekends, yeah, so we have no issue with meeting you there when your time normally does not allow. The most effective trading is before the market hour, because then you can immediately go and see where it is. And so we like to do that. We have some traders that trade odd sessions, then we meet with you and work on those odd sessions. So we are totally flexible, but we always work one-on-one. Let me give you an example. We had a person came to us and said, look, I want to have a system, I want to only trade random lengths lumber. So wow, that's a future, yeah? LBS-LBS. We can help you. We did a system which considers on top line weekly happenings, and that's what he trades it with. He has a reason for it. He supplies Home Depot and has an annual contract with lumber, and so therefore he wanted to hedge his bet. So when the prices for lumber go up or down, he is safe. So he uses it more for hedging than for trading, but you don't want to be with that person in a training session. So therefore we train everybody individually with all these elements that I showed you. And you see there's lots of rules and traffic rules that are all put on the chart. They look complicated for now, but look, this is like when you go into a cockpit of an airplane. If you're not trained, everything looks complex. If you're trained, you know how to look at and how to interpret different situations and how to put things forward. And this is why we work with you. Yeah, and this is how we move these opportunities for making them. And you see there's also losses. Losses are part of the game, but as said, for many of the instruments, when things are going the opposite way, we'll have the ability to repair the trade. Yeah, and so the trade repair will be essential for what your financial result. If you can limit your losses and you can make consecutive income, the algorithm or the function is very simple. You are up for making a business out of the trading endeavors, and it's a wonderful business. You can make it from the comfort of your home. You can travel, you can go somewhere. If you don't dedicate yourself to very short-term trading and spending 8 hours of screen time, the key to trading is preparation. So every day we send out also alerts, and if you are interested in that, just write me an email. I send them to you for free for a week. Yeah, so depending of what you like to trade, stocks or futures, or maybe you are an ETF, so I always have something for something. And so with that, we can carry ourselves forward and find the opportunities and execute on them. We always put every of our alert in Excel so that you can filter easy and can reduce the knowledge base and can use it for whatever you like to achieve with it. Some people, they'll trade more on weekly, others are trading intraday. It always gets critical. Our systems work on 1 and 2 minutes too, but that's a very tough environment. So why do I say it's a very tough environment? Look with me. I'll do a little calculation for you, yeah? I take the ES as an example, so 1 point is $50. So if you trade for $50, yeah, and you have about a commission of $4, yeah, so that's a today, some pay $3.50 or so. You have a commission of $4, but you have to give 1 tick, yeah, slippage. So what's 1 tick? $12.50. So yeah, when we look at this and say, okay, so if we are summing up this plus this one here, we have in $16.50. So if you see the percentage, if this divided by what you trade for, that's 33%. So you need to be a very accurate trader, yeah, because 33% of your potential profit you give away just by waste. So say, okay, I trade a little longer term, 17%. So if you trade 65% right, you waste 17% of your income. Between slippage and commission, you'll never make money. So $200, that's usually where I start the price threshold. So if 8%, yeah, so now you are up for making money. But you see, the thing is, it's not my preference. The system works at 1 and 2 minutes, but if 1 or 2 minute chart gives you only very little return, you're not up for making a profit. Yeah, so that's the key point which I want to share with you. I hope I sparked your interest. I'll be definitely here for questions if I have more time. And there is the two offerings that I have for you today. Yeah, top line 6497 with 10 hours of training, or trade colors 2497 with 6 hours of training. Yeah, so let me see where we stand in time. And should we be good, Anna? You help me if I missed out, please, on some of the questions.
Sure, will do. But we are running a bit late.
Yes.
It's 10:15 Pacific, but
Yes.
let me see if we can have some last question.
From what I see, I think
have you seen this question? Is the stop always 2 ticks from the setup bar?
Yeah, I did
Okay.
answer this. Look, it's not. It's a percentage of the expected price move, like 2%. So depending on the price move, but the rest we covered.
Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Alpha Fibonacci system. In this webinar, we'll be teaching you how to trade like a hedge fund trader with Alpha Fibonacci system, as I had been coaching and mentoring hedge fund traders since 2011. But first, let me remind you, it is essential to recognize that Fibonacci Trading Institute, myself and my incredible team, number of whom includes graduates and students of the course, are not the investment advisors. All the content, all the software, all the products, courses done to empower you with the markets for educational purposes only. Past performance not indicative of future results, and all software, all systems demonstrate it as is. There is no result, there is no guarantee attached of any kind, and I hope you understand risks involved in trading. No matter what instrument you trade, you need to understand and trade with risks you can afford. And all the testimonials you will see from traders all over the world do not guarantee anyone else's results. All results are individual, and no one had ever been paid or compensated for their testimonials and for their success stories. In this webinar, we will cover key steps, how to trade like a hedge fund trader with Alpha Fibonacci system. We will go over multiple examples from day trading, future stocks to Forex, current and prior markets. You will see how Alpha Fibonacci traders trade all over the world and how you can trade like a hedge fund trader with Alpha Fibonacci system. First, briefly about myself. I came to United States in 1999 with practically nothing. Within 8 years, I made first $1 million. I invested in real estate stock market. I hold multiple degrees. I speak multiple languages. 2004, I was introduced to Fibonacci. I traveled the world volunteering all over the world, searching for much more powerful things in life than success. I looked for power and meaning. And when 2008, I was introduced to Fibonacci during crisis, I saw clearly that market formed by Fibonacci puzzles, that everything else is noise. Then Fibonacci is drastically more accurate, more powerful than anything else. I developed first strategy 2011. I started Fibonacci Trading Institute, Fibonacci Trading YouTube channel, Fibonacci Trading podcast channel. Since 2011, I mentored traders on Wall Street at institutions in more than 50 countries, from beginner to hedge fund manager. I write, I speak at hedge fund conventions, and I teach daily as I've done as recently as 5 minutes ago, how to trade proprietary alpha Fibonacci system as hedge fund traders do all over the world. I travel meeting traders. I love what I do. Every single one of these traders trades and think as Goldman Sachs trader does, as JP Morgan trader does. I mentor them. I know how they think. On your left, hedge fund manager in Switzerland trading Forex. On your right, option traders. On your lower right, Sam, who put his daughter through Harvard trading my system via option. Every trader different account, every trader different time frame. And I get invited to weddings of my students all the time because those who make an effort with Alpha Fibonacci system become top 1% because they think and trade as top 1% does. They do not do what majority does. They only have interest thinking and trading as BlackRock traders do. Here's Carlton. Carlton just introduced to his best friends to the course. Listen to Carlton's podcast, see what he does. When he came to me, he struggled for many, many years. Now he's trading for hedge fund. Carlton booked all the boot camps, all the software I will ever develop. He tried for many years before. So if he can trade for hedge fund after so many years of trying and his friend Joe starting course today, so can you. Listen and see how Carlton trades Alpha Fibonacci system. Doing this complete semi-automated system with multi-market scanner and proprietary Alpha Fibonacci software. Software applies to NinjaTrader 8, but if you decide to trade on TradeView, Thinkorswim, TradeStation, Sierra charts, MT4, MT5, of course, you can trade the system without software. Software is not required. Software for NinjaTrader 8 was developed 2019. For the last 10 years, system traded without software as well. This is institutional, strategic, precise system that removes speculation and allows trader to trade markets as strategic alpha Fibonacci chess. Here's S&P mini futures this morning. Days in advance we identified with alpha Fibonacci system. This is ultimate buy point. This is a problem. This will be resistance. This is where selling pressure came from. So what would your trading be if you knew ultimate buy and ultimate sell point, no matter what chart you trade? Let me convert this chart to 1 so you can see what played out this morning. And what's playing out now in front of you? This is a market open on S&P. If I leave my pointer at bullish trend inception, this is a market. If I leave my pointer at crucial alpha Fibonacci resistance, the most important rule in front of you in a play right now. But if I convert this chart to 5, what do you see? Pure price only. Bullish trend inception. Right now is war zone in front of you. This identical system applies to anything you choose to trade. Ultimate precision. No indicators needed. Never, ever, ever. Choice is yours. You can trade anything you choose with Alpha Fibonacci system. System consists of only 2 components, indicator-free price and proprietary Alpha Fibonacci retracements. You will never, ever, ever need anything else. because you think and trade as hedge fund trader does. You don't have time to chase indicators. If I bring up to your attention simple pure price on any chart, there are no indicators, traders. This is critical, absolutely essential support and resistance in front of you. But as you will see in multiple examples next, Apple does exact same thing. So does Amazon, so does Pound, so any instrument you trade. And that's the power of this system. Would you like to trade Pound, Apple, Euro, oil, anything? Everything is exactly the same. That is the most important part that you must understand and recognize. Price action remains the same, identical on all instruments. So if I bring to your attention this chart, this is Dow with software. But if I convert this to Apple, price remains the same. This is split on Apple. You will see on different chart. If I would make Amazon, this looks exact same way as S&P. Identical. Every chart price is the same. You master this, you can trade anything you choose on any instrument, any account. Because if I convert this to euro, it's all the same. This is what I recognized in 2008. So when in the world are you chasing indicators? BlackRock traders, JP Morgan traders do not do that. They do not chase $50 magic bullet. They trade pure price. I know, I mentor them for the last 10 years. Because if you can trade one, you can trade it all. And that's the most important part of your trading. Let me convert this chart to S&P, the most powerful instrument in day trading in US. This is it. Identical. Looks as any chart on Apple, on Amazon. Buyers came in from reversal zone in July. Bullish trend inception. You will see much more next. And that's the most important part of your trading to recognize. If you can trade 1 minute on pound, you can trade 5 hours on S&P. If you can trade Bitcoin, Euro, if you can trade anything you choose, choice is yours. You can trade it all. And that's the most important part of your trading to recognize. Because when you come to the website and you listen to our podcast channel, every single trader trades different account. Every single trader thinks as hedge fund trader does. Traders from beginner to hedge fund manager, trading it all with Alpha Fibonacci system all over the world. And that's how critical pure price is, traders. So when you understand that, you stop chasing indicators. You start thinking and trading as hedge fund traders do with Alpha Fibonacci system. Here's Apple in 2015-2016 stock at crucial Alpha Fibonacci support. Bright pink line identifies critical support. I present at hedge fund convention when Apple comes out with the worst earnings in 13 years. What do I know clearly? The most important thing to see if this support will hold up or not. If it will hold up, despite worst earnings in 13 years, Apple will rally. That's exactly what Apple has done. Despite worst earnings in 13 years, Apple doubled in value. What do you see next? Next level. Next level to follow. With Alpha Fibonacci system, you know this in advance. Post earnings, Apple reaches next level. After following earnings, Apple reaches following level. When word reversal zone is present, it means expect reversal. What you see at the bottom, 140 level, allows you to buy ultimate bottom on Apple. Apple steps in with vengeance, reaches reversal zone, selling off again. But this is identical thing that's playing out right now in front of you on S&P and Dow this morning. This is ultimate bottom since European session. You can trade one, you can trade it all. Price action remains the same on Apple and S&P. And if I convert this to 1 minute, identical formula remains. This is bullish trend inception. You never short near, you looking to buy. Now S&P in war zone. You never short into this support. If this support remains respected, crawl will go on, but ultimate buy point as low as possible at bullish trend inception. And that's Dow as well. It's all the same. If I convert Dow to 5 minutes, to 1, to 10, to 15, it's all the same. Identical. Price does identical thing on every instrument. And that's the power of hedge fund traders' mindset. Pure price for entry and Fibonacci for exits. You will never, ever, ever need anything else. Because you understand, if trading on the news worked, every person on the planet will be Bill Gates. It does not. News designed by top 1%. The biggest vertical rally on S&P during the worst economic crisis is a stunning reminder. Trading on the news will never work. Trading on price does. And if I would remind you what S&P looked like before institutional rally had started in the previous 5 years, since before 2016 election, you will see instantly predictive power of Alpha Fibonacci system and why system traded on Wall Street and in Middle East and in Europe. Here is Alpha Fibonacci system on S&P. 2014, 2016, 2015, S&P stock at support. You see reversals on 2800 level. Skip 2 years forward. Here comes sell-off. Boom. No one is surprised, all precise. You knew this years in advance if you used long-term investment charts. Institutions holding positions for months and years. Institutions don't get in and get out with billions of dollars in a matter of seconds. But if you're riding institutional train, if you're riding institutional power, you are in excellent shape. Here is very powerful reminder. What played out on S&P before last election? This was bullish rally that started. Hillary leading the polls, market in panic, pullback from the end of the minor trend in a play. The night Trump wins the election, bullish rally skyrockets. Price reaches next level. But you knew this months in advance with Alpha Fibonacci system. You know where reversal zone is months and years in advance. You are trading with Goldman traders. You're rising multi-million and multi-billion dollar trade. You trading your little account as hedge fund trader does. Applying identical mindset, applying identical power. trading with Goldman train. When sell-off 2018 ends, buyers stepped in with vengeance from Alpha Fibonacci support. This was critical resistance. After Trump won election, you knew this years in advance where to buy from. So let me remind you the current events and what's happening on S&P right now before the election and what happened this year. Do you remember sell-off? Have you been in panic? Have you recognized that all the panic created by top 1%? Who knows? Crisis is opportunity. What is your crucial level? Bold green line. You know this months in advance. And when this level is reached, on March 23rd, you buying with institutions your micro account, your mini account, you're riding and buying the bottom with Goldman, with BlackRock, with millions and billions of dollars. And you know many, many months in advance where reversal zone will be. There is no surprise, all precise. The only thing that's left to break through the end of the minor trend. That's it. This is a selling pressure in the month of June. But if I skip forward to now on S&P, let me remind you what's playing out. We're at reversal zone traders. 3200 is crucial institutional support on S&P. Institutions been buying market viciously. This vertical rally is unstoppable. Mild profit taking is on. You knew this many months in advance with Alpha Fibonacci system. You're not listening to the news. You're turning off the panic. You're recognizing news managed by top 1%. And that's S&P in front of you right now. This support is critical, crucial. Mild profit taking is on. How to prepare for extreme volatility the night of the election is the most important tasks in play. And that's a review of Dow S&P from 1 minute 5:15 to Apple since 2014. So if you're trading with the first key step of hedge fund trader, you are not chasing indicators, you are not speculating, you are trading with precise entry, stop, and target. You are confident, you are riding power, you are not gambling, not speculating, not chasing markets. This is the system on S&P. No indicators of any kind. Precise entry, precise stop, precise target. And if you're trading with institutions and not against them, you trade like Carlton. And traders do all over the world. Let me remind you. Every single day I receive an email. Every single day I see the power of community of traders all over the world. And that's what means the world. This never ends. Thousands and thousands of emails. Choice is yours. You don't have to trade S&P on Apple. You can trade cryptocurrency. That's what Ken does. 116 trades and no losses since March. Do you want to trade Forex? Do you want to trade options? Or do you want to be like Gerald? He's killing me. He's 37-year veteran CME trader. Why does this matter? Because what does he say very, very clearly? You make trading a joy. That's the power of hedge fund trader. You will never ever need anything else. I promise you that. if you make an effort. And that's community of our traders. And that's what's possible. After 20 years of trying, Brett became successful trading pure price. And that's the effort of institutional hedge fund trader mentality. You will never, ever, ever need anything else. Pure price and alpha Fibonacci for exit. That's it. As traders share every single day. And he brought his son, 14-year-old, Dominic, killing it. He knows what he wants to trade. And as you can see, traders trading with institutions barely, maximum 2-3 hours per day. As Ken is joking, out-traded by 14-year-old. Every trader, different account, different instrument. Maximum 20 hours per week, as Andy shares 8. As Don says, prefer to golf. No need to stare at the screen. And if you want to trade stocks, of course you can. Absolutely. So if you see the market through the eyes of 14-year-old who knows he will be a hedge fund trader, what is stopping you? Do exact same thing as Dominic does. Listen to his podcast. That's it. This is a system on Amazon. Amazon Mid-Trend 2018 stock between alpha Fibonacci support and resistance. Many months in advance, you know where reversal zone will be. So when despite excellent earnings, Amazon selling off $700 per share, you are not surprised. And when a year later, Amazon selling off again $400 per share, you are not surprised. You knew this years in advance. You are not losing sleep. You are trading price because you know that trading on the news will not make you money. Trading the price, obeying the rules with alpha Fibonacci system does. Scott trades stock. This is community of our traders. As you can see, there are some of the instruments I don't even know what they are. Link USD, ATOM USD, 147-day hold. Boom, choice is yours. Jason prefers Dow. Can continue trading cryptocurrency. Choice is yours, what you want to trade. Listen to podcast with Ken. Please. As Scott shares, before he started the course, this hedge fund trader's account was 4 million. He raised it above 6 on stocks. He's trading very different instrument than Dominic, but he's obeying exact same strategy. You decide. Do you want to trade Bitcoin or stocks or futures? Price action remains the same. With second key step, identifying institutional trends and ranges prior to placing a trade. This is what institutional trader does. Let me remind you what played out on Dow during the crisis and how essential it was to trade pure price and not to panic but to look for opportunity. Here's Dow. Sell-off in progress. Let me remind you. Do you remember Dow in the March 9th, March 11th? Have you heard positive news on those days? Of course not. On the chart, Dow was rallying 1,000+ points. So when Dow crashed to the downside, 3,000 points, Dow rallies to the upside 1,200 points. It's because alpha Fibonacci support is present. You know many days in advance where reversal zone will be. Finally, this is what plays out when ultimate bottom is reached. Boom. Started in March, traders. March 22nd. This is day trading chart during historical event. So if you're trading day trading chart with institutions, last week in March, you are not leaving the screen. You are not panicking. You know very, very well where institutional buy zone 19,000 is. So when price reaches this level on Black Thursday, there is nothing that's stopping you from buying the bottom with institutions. You knew this level months in advance with Alpha Fibonacci system. That's where rally came from on day trading chart. Just like you knew months in advance where reversal zone will be. When Dow reached this level. That's it. That's the power of the system. Right institutional trade. Do not ever trade against institutions. The most spectacular vertical rally during historical economic sell-off is a powerful reminder. The only way you succeed if you think and trade as Goldman Trader does. So what would your trading be if you traded with institutional power? If you stop chasing indicators, if you stop speculating? These traders been there, done that. They never need to do anything else. They only trade Alpha Fibonacci system on stocks, on forex, on options, on futures. Choice is yours. You can trade it all with Alpha Fibonacci system and at institutional buy zones. Your trading day can last less than few minutes. Listen to more podcasts, read more emails I receive. As community of traders growing globally every single day. Trading this. Pure price for entry and Alpha Fibonacci for exits. It is that simple. Do not overcomplicate markets. Give yourself that favor, please. And if you do, you can trade it all with Alpha Fibonacci system. So this is Gerald, the CME veteran trader, as I shared before. So listen to Gerald's podcast, please. What experienced hedge fund trader trades and why he loves the system. Gerald had been with me only a couple of weeks when he says, finally, you make trading a joy. And please don't do what Gerald does. Don't. He's an experienced trader. But see what's possible if you start trading pure price, please. And that's your choice. Jennifer prefers to trade in Q. This is Gerald. Used to trade 800 lots. So to receive compliment from such experienced trader is a reason I love what I do. So when oil reaches ultimate bottom in 2016, it's opportunity to buy. Exact same thing is played out on Apple. Exact same thing is played out this morning on Dow and S&P, correct? This is identical chart in front of you. What is the difference? This is your long-term investment position, opportunity to buy oil at the bottom. And when oil continue rallying, you know many months in advance where reversal zone will be. And when oil crashes, you know many years in advance where bottom on oil will be. So when this year I was working with hedge fund trader in Saudi Arabia, we were in shock when we were looking on oil. Negative. Have you ever seen negative number? So listen to Mustafa and how he was buying the bottom because buyers stepped in with vengeance. This is oil now, frozen. at alpha Fibonacci resistance. Identical buy point oil 2016 and oil now, as plays out on S&P this morning, as played out on Dow, as played out on Apple. It is all the same. Risk management is the only difference. That will never change. Third key step of hedge fund trading, identify your trading range. Every day it varies. Market conditions change. Last few weeks is a perfect example of a perfect difference in every trading day. So when you're looking at the institutional chart on S&P, this is where you make most of your money. Buying the bottom with institutions starting March 23rd. Bottom. You are not entering into resistance. Market is vicious and brutal now. Mild profit taking is on. This is institutional support. This is a place to buy from. Today is a very different day. Market in brutal pain. And that's what intelligent trader understands and knows. Buying at institutional support, buying at critical institutional buy zones is crucial for your trading success, no matter how small or big account you trade. And that's crucial part of a big difference in every trading day. You decide. If you want to trade gold, of course, traders love trading gold because gold is very volatile. Gold giving you spectacular investment opportunities. This is gold on institutional chart now. Sold off from alpha Fibonacci reversal zone. But if you listen to podcasts from Jousef, hedge fund manager, Jousef was buying gold with alpha Fibonacci system at the bottom 2018. This is the top on gold, knowing what to do with your position. With your investment on gold, you must obey the rules. So if you're trading this little chart, you're riding institutional train. No matter how small or large account you trade. And that's what traders do at difficult trading ranges. They understand the precision, they understand the difficulty, even during the worst market conditions. So here's the software, here's the scanner traders. This is what it looks like on multiple instruments. Here's a scanner right now. You can insert multiple instruments, anything you choose. Any stock with a single click. Every trader decides what trader wants to trade. That's it. When you start the course, I highly encourage you to concentrate on one. I drill into you. Top 1%, sniper's mentality. You start understanding the power of synchronicity using scanner. And if you do, you're trading with community of powerful, positive traders who supporting each other. With experienced mentor, powerful system, you decide what you want to trade. And that's, in summary, today's event. So if you come to our homepage, you will see and you will read the details. You can trade anything you choose. System traded since 2011 on any platform, any instrument, traded on all. Next week, we're starting annual Genesis Trading Bootcamp. This bootcamp will not repeat for at least 3 years. So if you're joining to sign up for the last 2 spots, in one day you will earn more than the previous 20, 30 years. All of the students, all the testimonials you saw throughout this webinar, all of the students will be in bootcamp. Carlton will be in bootcamp. Brad will be in bootcamp, bringing their friends and family. Because this event will not repeat again. Genesis Bootcamp savings up to $5,000 included in each package. Group course with lifetime system or private mentoring 6 months with lifetime system include Genesis system, Genesis trading bootcamp. And that's a huge difference. Signing up now versus later. I will not teach Genesis system after the bootcamp. If you are fortunate enough to grab 2 spaces and to take advantage of Genesis system, Genesis trading bootcamp, please review all the details here. And if you do, you will recognize. You can view videos 24/7 if you cannot attend. But every single day, during the worst market conditions, week before the election, you will see how instantly market will change. You will understand that you will never, ever, ever need another indicator again. You will trade pure price. You will think pure. You will operate as a sniper. And that's everything I have for today's webinar. I cannot wait for a bootcamp, as Genesis is one of my top strategies out of 32 I developed in the last 14 years. So if you're joining us, it's one of the smartest things you have ever done. We will start every morning at 9:15 for 2 weeks. You cannot attend, not a problem. Students in Hong Kong, in Saudi Arabia, in Australia, students who are operating and working full-time businesses can view videos 24/7. So when you join us and you log into the member area, this is what you receive. Modules with videos available 24/7. So when you click, you simply view hundreds and hundreds of videos and you install settings on any platform you choose. You decide. Do you want to trade Apple, S&P, and Q bonds or oil or Dow? Absolutely up to you. Because if these traders can do it, so can you. So please, listen to podcasts as you will find someone who's just like you, struggled for many, many years. If these traders can do it, so can you. You will never need another system ever again. All you have to do, make an effort. Any questions? Do not hesitate to call or email me. Click on upper left corner, Contact Us button. Call or email me 925-257-4298 or info@fibinstitute.com. Thank you, traders, so much.